Welcome back to ICT Trading Concept. How are you all? I don't know that is there anyone or not. If anyone here, please respond my things, okay? That you can hear me. Okay, sorry, means you hear me. You are here. Okay, that's good that you are here. Can you hear me, brother? Please let me know that first. I will talk about the trading psychology and the price action for the next week. I mean the weekly bias. You can say like that way because I will talk both of them at the same time. I will talk about the price action. In the meantime, I will talk about the. Okay, okay. Thank you, brother. Thanks for confirming that you can hear me. Before starting, I would love to say that I have scheduled the streaming and then I have tried to open that streaming. I mean that link, but I failed. I have no idea how to start a streaming from schedule stream. So I have started a new streaming instead of that streaming. So I don't know. Maybe some people are waiting from that link. I have no idea. Hey Hans, how are you, brother? Thanks for confirming. That sounds good. Okay, so trading psychology and the price action for the next week. I can see both of you are very much interested to learn. I mean, to waste your time with me. Oh man, this is the dollar index, and as we have a very few person, I mean, we have I think three guys over here. So I would love to talk to you. Okay, so respond me with my question. It will be easier for you and for me as well to talk about something first before starting anything over here. Okay, I would love to show something to Remy because yesterday he was actually asking me something. I told him if when I will be live, please ask me the question. I will talk about that. Okay, let me first find a set. Okay, just let me show it from here. Okay, so just think this is the last fair value gap. Okay, so price is going higher like this, not that one, not yeah. When price came here, it has made the last fair value gap. Maybe there is some other fair value gap as well, on fair value gap over here, on fair value gap over here, but this is the last fair value gap from 15 minute chart. I'm just giving you Remy, this is only for you, okay brother? So this is the last fair value gap. Now when price will come here, it will be rejected from the consequent encroachment. Nobody will close below the consequent encroachment. It will do this type of things, okay? And then it will go above the last 50-minute fair value gap. It will come over here. If there is a very clean buy side liquidity, you will take that buy over here. Now this is not right, okay? This setup is not right according to my rules or according to my observation. This is not right. It is right if, okay, this setup is right when it will be right. This is the last fair value gap, but price didn't go from here to here. Instead of that, price came here to here. Okay, now when price come, not that one, just remove that one first. Price come from here to here, so this is the last fair value gap. Now price went through the last fair value gap. It went through the last fair value gap. Then I got the rejection, I mean I got the setup here. Okay, and if there is a clean buy side liquidity, this setup is valid. This one is not valid because price came here to here. When price come here, I expect this last fair value gap will hold the price and send it back to high. Over here, when price will come here to here, I will expect the same thing, that the last fair value gap will hold the price and it will send it back lower again. But if the last fair value gap failed to hold the price, instead of that, if it go through the last fair value gap, then this setup is valid. If only if there is a clean buy side liquidity. Same thing like that way. Just price came from here to here. Okay, so not that one. Sorry. Here. So price came from here to here. This is the last parallel gap. When price will go through this parallel gap, only then I will look for this setup. Okay, if there is a very clean sell side liquidity, this setup is valid. That means the last parallel gap the price should have go through the last parallel gap. This is the rules for this setup. Now, if what type of setup I will look over here? There is only setup I will look over here. Okay, and what is that? I will say price come from here to here. This is the last parallel gap. Price come here, maybe it come here. Body shouldn't close below this parallel gap. Okay, try to understand, brother. Body shouldn't close below the last parallel gap. I will love to see from 1 minute chart. This is the 15-minute chart. This is the 15-minute last parallel gap. I would love to see from 1 minute chart. If I see nobody close below the last 50-minute parallel gap from 1 minute chart, that is actually more strong sign that market would love to go higher. But if you see sometimes price go through the 50-minute last parallel gap from 1 minute chart, it go through this. Okay, then you will expect the setup over there. Sometimes, rarely, nothing is 100% certain over here. Sometimes maybe you will take a loss over here. In that case, you will go back again 15-minute chart and you will see from the 15-minute chart the bodies from the 15-minute chart, not from 1 minute chart. If you get the setup, if you take a sell but you are stopped out, okay, then you will go back to 15-minute chart and you will observe the price from 15-minute chart, that is there anybody that has closed below the 15-minute last parallel gap or not. If you see nobody closed below the 15-minute parallel gap, wick can come. The wick can come here. I don't care about the wick, I care about the body. If you see the last parallel gap hold the price, then you will go back to 1 minute chart and you will look for a buy setup. Now, what type of buy setup you will look for over here? You will wait to make some kind of liquidity first. After making the liquidity, it has to take the liquidity. Then very nice market structure shape with a very fine parallel gap over here. If you see two parallel gap, you know our well-known setup. If you don't see two parallel gap, one parallel gap, that is also valid. I don't care about the 15-minute parallel gap for my entry. I will look for 1 minute parallel gap for my entry, 1 minute buy side liquidity for my exit. Remy, just let me know, is it clear or not? Okay, just let me know that. If it is confused, I'll talk about that again one more time. Until you finish this, I'll talk about this. I mean, until it is clear to you. And now, hence, I would love to talk to you sometimes before price has started to respond to your expectation. Okay, you have commented that yesterday. If you remember or not, I don't know you were there or not. I also don't know that. I really don't know. But I have talked about this, that when I have started to learn this concept, nothing worked with my expectation. Nothing at all. Okay. Yes, it is clear after sleeping one night over. It's clicked now. Okay, thank you, Remy. Thanks, brother. And now, Hans, I don't know you are here or not. Uh, when I have started to learn this concept with with very seriously, I have started to learn this. Nothing worked with my expectation. 90 or 80% of the time I expect something, price did something else. I do something. Did you trade NFT? Brother, you have to go to my Twitter, then you will understand did I do anything or not. Okay, just go to my Twitter and watch every tweet from yesterday, and you will find me over there. I mean, if you search from at the rate of NRT12355, I hope you will get my ID. Okay, and from there, please watch every tweet I have tweeted yesterday. Uh, you will understand that did I trade or not. I don't want to. I don't want to praise myself by myself. So I'm just giving you the direction. You can find it out. Okay, Dre. So Hans, I was talking to you. Every time I expect something, Price did something else. I was very frustrated because nothing was working. Sometimes, very rarely, I was right. Most of the time, 80 to 90% of the time, I was wrong. Okay, I keep doing the thing, same thing again, 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 and suddenly one day, I even didn't notice when it started to respond my expectation. Okay, then I have found that 80 to 90% of the time I'm right. Very rarely I'm wrong with my expectation. That means whatever I have expected from the market, market is just providing me that. If you ask me, brother, when it happened, how long it takes, I don't know. I have no idea, brother. But suddenly I noticed that everything is working perfectly with my expectation. Okay. So when you have write it down, you study that suddenly you have noticed that price is actually providing your expectation perfectly. I remember that day when I have also feel the same feelings. Okay, man, this is the feelings you can't explain. If I ask you how do you feel, you can't explain. I believe that you can't explain. I can't explain when I just ordered market to do something and it do the same thing whatever I have ordered him. This is the feelings, brother. You can't explain, but it happens suddenly. Uh, if there is any other, I mean, if any of you are new, brother, I have already headline that this will be about the trading psychology and next week price action. I mean, the expected bias. So I will talk both of them, but it is more of the gossiping time. So if you are here for getting some information, you have to wait. Otherwise, I think it's wasting your time. Okay, so it's up to you. If you would love to stay, you can. Otherwise, you can leave. This for the uh, clearing your doubts that what I am talking about here. So the guys over here, like Remy, Hans, I know both of you. Dre, Duff, I really don't know you. I didn't see your name before. I don't know you are new here or this is your first day of my streaming or not. So I know both. I mean Remy and the Hans. So I'm telling both of you that trust me, brother. Suddenly you will start to feel that everything is working, but when it will happen, nobody knows. Even you can't notice that. You won't be able to notice that when everything started to work for you, but it will start if you stay over here. I mean, not for with me. If you stay with this concept, you will see one day, maybe today or tomorrow, you will see everything started to work perfectly. Now that's psychological part. When you will see that market is actually respecting your expectation, what is the first thing you will do wrongly? What I have done, okay, what I have done wrongly, that is I was started to expect that okay, when price is actually respecting my expectation, so I have to take 2, 3, 4, 5, 6, 7, 8, 9, 10 entry in one day. This is the thing you shouldn't do. Okay, I'm not sure it is clear or not, but trust me, brother, you have to be strict with one setup, one entry. If you get a fine entry, a very clear entry, very clear setup, you take it. Just stop taking any other entry. If you think you will be right every time, that is psychological issue. Though price is actually providing your expectation, if you are greedy, you will take loss, and it will stop you from long time winning trade. Okay, you won't be the winner for long time. You will be a short term winner, or the short term trader, okay, over here, over to this market. So this is the first thing I would love to tell you. You have to be careful. If price started to respect your expectation suddenly, you have noticed that okay, price is actually respecting your expectation. Go for one trade only. If it is for five handle, that's good. Perfectly, that's good. Just wait. Just take that one hand for 4 to 5 handle. If it provide you 10 handle, stop over there. If it provides 50 handle, stop over there. Don't be greedy. Don't think every time market will give you the precision. Every single time you will be the winner. Don't think like that way. Very important, brother. If you just can strict with one entry, just one entry. If you take your first entry, it is a losing entry, okay, then you are allowed to take another entry. Like for me, I'm allowed for three entry. If I take one losing entry, then I will try two more time to mitigate my loss. That actually uh, that my money management provide me that, so I am able to take three entry. If I take the first entry losing entry, then I will try two more time to mitigate my loss. আম্মা, এই দরজাটা একটু বন্ধ করে দিয়ে যাও তো, দরজাটা বন্ধ করে দিয়ে যাও। সরি, দরজাটা বন্ধ করো। টান দাও। থ্যাংক ইউ। আটকাও। থ্যাংক ইউ। I'm sorry, his my sister was actually watching something, so the sound was coming. That is distractive. I mean, distraction for me. So, what I was talking. So this is the psychological part. Okay. Now, maybe you will overcome the price action. Maybe you will be the best reader of the price action, better than anyone else over here. Maybe you will be at a high level of reading price action. Okay. But if you don't work with your psychology, this price action is not going to help you to be a long time profitable trader, consistent profitable trader. What is psychology? Psychology is if you get one winning entry, stop over there. Just stop over there. Train yourself. You are now trading through your paper money. So please train yourself not to take more entries in one day. So you are not going to leave the market by one day. Why you are hurried to take so many winning entry from one day? Why? Why? That is my question. Why? If you are here, if you can take three winning entry, okay, just three winning entry from 1 week, that means 5 days, you have 5 days to trade, and you get only three winning entry. Maybe per day you take 10 handle, just 10 handle, that means 3 days 30 handle. 30 handle multiple by $20, that is $600. $600 from 1 week. Not huge, brother. I wanna be millionaire. Okay, so you are right. You know that your price is actually providing you the perfect way. Whatever you are expecting from the market is actually providing you that. What you will do later, you will add one more contract. Okay, so previously you are allowed to take one contract, now you are allowed to take two contract. That means $40. 30 handle into $40, that means $1200. What do you think? $1200 in 1 week, it is small? No man, it's huge. If you have three account, you use the copy trade. So in three account, you took two contract per account, take only 10 handle, 3 days winning, three winning days out of 5 days. You wait for the perfect setup. You didn't force market to give you the setup. You waited for the perfect setup. In Monday you didn't get it, okay, don't take entry. In Tuesday you got a perfect setup, you took it. It provide you only 10 handle, okay, cool. Wednesday you also got another entry that provide you 20 maybe 15 handle. That's good. Thursday you didn't get any perfect setup. You knew price will come here. You knew that price will come over here, but you didn't get any setup. So you didn't take any entry. You didn't force market because you are expecting price will come over here. That is your expectation, okay? Nobody knows that price will come over here. I know price will come over here, but I really don't know price will come over here. I know because this is my expectation. So when price will come over here, I will tell you, see brother, I have already told you price will come over here. I knew price will come over here. I knew it. That means I was actually expecting market will come over here. Nobody knows where market will go. Not even the ICT. Nobody. Nobody at all. Nobody knows that where price will go. So if you wait for the perfect setup in Friday, and you got another entry maybe that provide you five handle, only five handle, Overall you got 30 handles. Now you have three account. You use the copy trade. Per account you took only two contract. That means $40, $1,200 per account. Three account, $3,600. Oh man, it's huge. I so far I know Apex actually provide 50 account, 50. Like, let me mark it. 50 account. It allowed to take 50 account to trade. I mean, you can use copy trade for 50 accounts. So far I remember. Okay, I'm not sure, so don't judge me about that. Apex, like a prop firm, they maybe provide you 50 accounts. So you use the copy trade for 50 accounts. Now you can multiple the amount how much it will be. What I would love to say over here, that is, just take one winning trade in one day. It will help you, brother. Silver bullet, I can expect the lose. What did you say? Any advice for time-based strategy? I can expect the lose. Oh man, actually, it is under the. Okay, silver bullet. I can't expect the lose. Okay, silver bullet, brother. I don't want to talk about silver bullet today. And time-based, everything is time-based. So it is nearly impossible to explain the time-based setup by one video. So I yesterday, like the day before yesterday, I've uploaded a video and I told you to watch that video so that you can understand what is time, why I took that first time, then price. You can watch that video. I hope that will help you to understand time based. What do I mean by the time based? Okay, I think is actually, just let me actually find it. Just a second, okay. I think that is this video, okay, how to wait for building liquidity by ICT concept. If you go to my channel, you will get this video, and from that video you will get some kind of information about the time. I hope to help you, okay, brother. Agree what I was talking over here. So that is the first thing. Now I would love to add more here. And what is that? That is, now I'm practicing through my paper money, okay. So this is, I'm just practicing by my paper money. So if I take 3 4 entries, that doesn't matter, because if I lose, I'm just losing the paper money. It is not going to what to say, that it is not giving me any real money lose. Okay, so is it bad? Obviously this is bad. Why this is bad? Because when you are doing this thing through your paper money, and when you will start your live money, this habit you can't change. You can't change your habit. Trust me, brother. You can't do it. That's why when you are learning through your paper money, you have to train your psychology at the same time. You are not allowed to take two entries from one day. Now, brother, can I use this one? No, you are not allowed to use this one as well. Why? Because if you use this one, and if market hit your stop loss, you will just remove this one. If market doesn't hit your stop loss, instead of that, if it hits your target profit, you will start to think, okay, it worked perfectly. So that will build your confidence that if you would love to take 2 3 4 5 6 10 50 10 20 entry in one day, then you are eventually will be the winner. But if it is your real money, trust me, brother, everything will be changed. So please, this is my request. Please, just don't take two entries, not even two entries in one day. If you can take up one entry, now if you say yourself, brother, I will take one entry. Whatever happens, I will take just one entry. Then you will wait for the perfect setup. You will wait, okay? And that will build your psychology more stronger. There is not even a single person who is profitable and who has a very weak psychology. There is not even a single person. No weaker psychology who have the weakest psychology. He can't be the consistent profitable trader. He can't be. No. If you tell me that, brother, I saw a person who has a very weak psychology, who is used to take so many entries in one day and he's consistent profitable trader. I won't believe it. I won't believe it. Now there is some other people like Patrick. I think some other people, they're actually showing you that they're taking so many scalping, like Cami. Cami is one other guy. I really love his trading because he took so many entries. Okay, they're actually can we trading two session? If you have two account, okay, you are not using the copy trade, you are using two account differently, then you are allowed to take two entries. One account you will take entry to the morning session, another account you will take entry to the PM session. It is, you are allowed to do that, okay. But the perfect, I mean, if you ask me the what is the best thing is you are allowed to take one entry in one day. Why? Because when market actually go to a certain level, after that most of the time you will lose your focus. Not only you, the guys who have very low experience like me, I have 3 to 4 years experience, it's very small. Whoever have this type of small experience, if you have only 6 month experience, you are not even allowed to take one entry to your live account. Not even take one entry. You are not allowed to start your live money trading. Now it could be very rude. I'm not allowed to tell you that you are not allowed to take start your live money. But to be honest, brother, experience is the most important thing over here. So you have to wait. You have to wait for live money trading. Okay, which platform do you use? Top step, brother. Right now, I'm just using only top step. I blow my FTMA account. If you tell me why, then I really would love to. I mean, escape from the platform. I would love to start my own funding account. Okay, so that is why I I did something wrong. I mean, I over leveraged over there and I blow my account to FTMO. And top step, yeah, very soon I'm gonna blow that account as well because I want to I mean, escape from this problem. Live money or the own funded account, there is the freedom. When you will start to trade to this type of platform, you will have no freedom. Okay, and it takes near about 2 years to understand why ICT don't trade the platform, why he doesn't trade over here. So it took for me to near about 2 years. Now I'm not telling you to do that. This is my thing, my life, my rules. So I will do that. Okay. So I'm not suggesting you to start your own or live your live money own funded account. I'm not telling you that. That is my expectation. I will do that. Okay. And I'm just telling you that I blew my account. Now you can think, okay, this guy doesn't know anything. Okay, you can say like that way. I really don't know anything. What I was talking about, I forgot about again. Whatever. So the best advice is not to take two entry in one day. But if you have two account, then maybe after that you can take two entry, one account morning session, another account at the PM session. You can do that. But my advice is not to take two entry in one day. It will help you, brother. But when you will have much more experience, you can take 3 4 5 entries in one day. Okay, and now what I was talking about, another thing is, you can see some people who actually do the live trade. Sorry, live trade. What they're doing, they're actually showing you they can scalp, that is scalping. Okay, but trust me, they have another account which is their actually own account. They do trade their own account secretly, not publicly. Okay, trust me, brother. If you don't trust me, I don't have any evidence to show you that they have another account to trade personally. But whatever account or the live fund account they are using in front of the people, they're doing that to show you that everything is possible. Okay, but trust me, they have separate account. They trade for the living. If they live like me, only depending on the trade, then they will must have a secret account or the separate account. They trade over there personally. Okay, I have no idea how to how to prove that, but it is what it is. Okay, that is my observation, that is my thinking, that is everything actually is mine. Okay, so it's up to you. If you would love to believe me, you can. If you don't, you can skip this part. Okay. So this is the one kind of psychology when price will start to provide the price action through your expectation. You have to stay with this rule that I am not going to take two entry. I am just allowed to take one entry in one day. It will help you so much. Now this is the dollar index weekly chart, and all of you know that last week I was expecting price to come over here to this specific fair value gap, and finally I'm expecting market will come at least over here. Then it will go above or not, I don't know. I will read the price over there, then I will decide my bias. But yesterday, I mean last week, I was expecting price will come here to this specific fair value gap. Now price delivered over there. I'm very happy that price came here. Now if you ask me what do you want to see now, this week I would love to see some kind of, I mean, consolidation. Okay, it is not going to take that low, it is not going to take that high. If it went above that high, there is much more possibility market will come over here. I can expect the price. I can't tell certainly that price is coming here or price is coming here. Why? Because this is the place where we have two chances. There is two chance. Okay. Price came here to the last weekly fair value gap. See, where did the body close? Just above the constant encroachment of the weekly fair value gap. Then price went higher. Where did it go? To this fair value gap. So price came here. I got the respect. It came here. I should expect some kind of reaction from that fair value gap. If this fair value gap can hold the price, there is much more possibility that market will come here to this low. It will take that low, though I don't want to see that. Instead of that, I would love to see price will expand little lower, then it will go through this fair value gap. I really would love to see that. Until price reach here, I am expecting bull run for the dollar index. Good talk. Props messes me psychology then personal account. Yeah, Asian Range Mystery. It actually broke my psychology as well. Okay, the prop firm. Yeah, though I was actually trading through my prop firm for so long, and near about 1 year now. I have managed my I have managed the money from prop firm. I don't want to say that prop firm is bad because I earn money from prop firm. I gather money for my own or life funded account from prop firm. So I am not allowed to tell that it is not good, but it actually destroy most of the time my psychology. Okay, because there is some rules. If there is some kind of rules or what to say, some kind of barricade that will stop you to take entry, or it will stop you think that uh, you are free, you are free to trade, then it actually destroy our psychology. That is my belief. That is why I'm going to escape from the prop firm, and I would love to start my own funded account. Okay. How many new week opening gaps do you use? New week opening gaps. Okay. The new week opening gaps is I use them for maximum five, so not maximum, minimum for 5 weeks. Okay. After 5 weeks, if price go through that new week opening gap, I remove them from my chart. But if you ask me, like just think like that way. Okay. This is a new week opening gap. Just think like that way. Price has made a new week opening gap over here, and then price went higher. It came here. I will keep that until price will come here, that to that new week opening gap. I will keep that new week opening gap to my chart until then. If it takes 5 years, I will keep it for 5 years. So I guess you got your answer, brother. Now this is the daily chart. You can see this low and that low has made relatively equal lows. Okay. Below every relatively equal lows, there is sell side liquidity. Price went lower, it went higher to this daily fair value gap. Now, when price come over here, and if you ask me, what is your expectation right now? Where price is going? I have buy side liquidity over here, over here, here. All of this buy side liquidity I have from the daily chart. I have sell side liquidity here as well. Price come to this fair value gap, the last fair value gap from the daily chart, then it came back again to this fair value gap from the daily chart. So this is another fair value gap from daily chart. Price go over there, price came over here, then price closed over there. Okay, at the middle, and price closed over here. There's there's no determination that price can go above, price can go lower. You have both buy side liquidity and sell side liquidity. Don't forget trend line liquidity too. What is trend line liquidity, brother? Uh, what type of trend line liquidity, brother? Are you talking about this? Something like this? Okay, just let me know that are you talking about that or not? I actually go for the relatively equal lows, not that type of trend line liquidity, because this is much more easier for me to determine my drawn liquidity. It never actually go against my expectation. It always work with my expectation. That is why I love to mark the relatively equal highs and the relatively equal lows instead of any other liquidity like the PM session high, previous week high, previous day week high, previous day high. I don't love to mark them. I still not using trend line. Okay. I don't know, brother, about the trend line. I really don't know. I use relatively equal highs and relatively equal lows. Okay. Okay. So you are maybe talking about this actually market. I think you are talking about here. I think you are talking about this one. Or maybe from here. This type of liquidity. Maybe you are talking about this, something like this. I don't know, but really, to be honest, brother, I don't look this type of liquidity. Okay. I don't look this type of trend line liquidity. I don't look at them. Okay. I don't know, brother, but I don't want to go with that. Okay. I'm sorry, but I never backtest it or I never look about them. But it is what it is. I don't know. Price came to this last fair value gap and it come back again to this fair value gap. Now I have sell side liquidity. I have buy side liquidity. Where price can go from higher time frame. From the monthly chart. I'm expecting price will come over here, the weekly fair value gap and the monthly inversion fair value gap. Okay, so this is the monthly inversion fair value gap. I have uploaded last week, in 1st of January, about the uh, top down analysis. Watch that video. You will see all of this level how I mark them. You can see that from there. Okay, so I have this weekly fair value gap. I am expecting price will come to this weekly fair value gap at least. When price will come over here, I wanted to see price will come first to this fair value gap, then it can consolidate, it can do some kind of retracement, then it can expand higher or any type of things. So I'm not expecting price is going to take that sell side liquidity right now. Instead of that, it will go above and take the buy side liquidity first. That is my expectation from higher time frame. From lower time frame, it come to this fair value gap and this fair value gap, both of this fair value gap, and it closed inside this two level. Last week I was telling you price is coming here. I believe price is coming here. It came here. This week I'm telling you I don't know where price will go. Okay, I'm just telling you I don't know where price will go. Now, oh brother, you don't know anything, so why you are wasting our time? No, brother, sometimes price will stay some kind of level and you have to find out them when you have nothing to do to until you get further information, more information. You need more information. price has to give you some kind of sign that it would love to go lower or it would love to go higher. How do I know price will go higher or lower? Price closed over here. Okay. Now, if I see price came here, maybe to the consequent encroachment of this fair value gap, then it went back again above this fair value gap. This is kind of sign that market would love to go higher. I'm little sick because I catch cold last day. Last night I was still playing cricket and it is winter over here in Bangladesh. So I catch cold. I'm little sick. Okay, so if I see this, that is kind of sign that market would love to go higher. Why? Because it has taken the sell side liquidity from that low. It came to the consequent encroachment and then it closed above the fair value gap. So this is the sign that market would love to go higher. How do I know that price will go lower? Two type. I mean there two things can happen. First thing is it will go through this daily fair value gap and it has to close below the weekly fair value gap consequent encroachment. At the same level, you have monthly fair value gap high. So price has to close below the below that level. Okay. Now you can tell me, brother, it can take 2-3 days. So what will we do? We will stop taking our entries? No, that is different thing. We can take our entry from 1 minute chart. That is scalping. We don't need daily bias, weekly bias for taking our entry because we trade from 1 minute chart and 15-minute chart is enough for us for as a higher time frame. Okay, then why I am talking about here about the daily or weekly or monthly? We are talking about here. uh, I mean, it needs, okay, it needs for your for understanding the lower time frame. There is so many noise over there. If you have a expectation from the higher, very high time frame, you can react to the lower time frame according to your expectation from the higher time frame. It is very confusing. I know even I'm confused what I'm talking about. In short, you need the higher time frame analysis. Daily, weekly, monthly, you need that. Overall, where price is going. This higher time frame is actually telling you where price is going. For taking our entry, 15-minute and 1 minute chart is more than enough. Just it's enough, okay? Uh, Trend lines are not needed if you understand ICT, brother. Okay, yes, but draw from a higher point. Okay, Edwin, it's another confirmation of price action going for buy side. Okay, that's cool, brother. I think that is also working like over here, but I really don't understand the trend line things. Okay, I only understand this type, these two things. I don't go any other liquidity because that is confusing for me. But these things never fail, never ever. The equal highs, relatively equal highs, or the shallow run highs, this never fails, never ever. That's why I go for them. Now, when price will go through this, all of this level, and if it can close below the monthly fair value gap high, weekly fair value gap constant encroachment, and also below the daily fair value gap, this is the daily fair value gap, okay, then I will start to think market is coming over here to take the sell side liquidity, and all of this actually needed for the higher time frame basis. Another thing, if okay, if price come back again to the lower part of this daily fair value gap, and this is the weekly fair value gap. If you remember, this fair value gap is from weekly chart. So if it comes to the lower part of this fair value gap, okay, I don't want to see it will go through that constant encroachment or it will take that high. I don't want to see that. Why I don't want to see that? Because from monthly chart I am expecting price will come here to this daily fair value gap. Now if it can go above that high, that means it is telling me market is actually coming here, it is not going to go lower. But here I'm telling you, how do I know that market is going lower? If it can come to the lower part of this fair value gap, at the meantime this is the consequent encroachment of the weekly fair value gap. So if it can come here, then it is started to go lower. I will start to think, okay, market is coming to take that sell side liquidity, I mean that low first, then the constant encroachment level, then the lower part, and finally this sell side liquidity. It is going to take that. I need to ask you a question. Do you understand these two directional bias? How I determine the directional bias? How do I know that market is going to take buy side liquidity or market is going to take the sell side liquidity? If you don't understand, I will repeat that one more time, because this is your learning point. Okay, you have to learn this thing. You don't need to learn the the entry setup. That is the easiest one, and if I even don't tell you about that, you can easily take your entry. That is the easiest one. You need maybe 5 minutes to understand or to get to learn how to take entry. You will need maybe 2 to 5 minutes maximum. But this is the part you have to understand. Price is over here. It came to the lower fair value gap. It came to the higher fair value gap from the daily chart. Where price will go now? I have no idea. Is it going to take sell side liquidity? No, I don't know. If it is going to take that buy side liquidity, I don't know. Then how do I know where market will go? What price action I'm expecting to see that market is going to take sell side liquidity, or what type of price action I would love to see to understand that market is going to take that buy side liquidity. Okay, I really would love to ask you the question. Do you really get it or not? If you don't get it, I will repeat this part one more time. Why there is no new week opening on trading view? New week opening on trading view, what do you mean by that? You have to mark it by yourself, brother. The price action is currently 150% of PDR. Okay, PTR is different thing, brother. Okay, we'll just let it go. Yeah, it's maybe it's at the 50% of the premium and discount area. Can you please make a video for 15 minutes and 1 minute entries? I have already done that, my thing. I have already done that so many times, brother. So many times. Going lower is clear, but the other side up, not sure. Okay, so Remy, thanks for that. Okay, so you understand when I will expect that market will go lower. Now, when I will expect that market will go higher. If I see price came here, okay, to the lower part, it has to take the liquidity from that low. You see this candle below that low, there is my sell side liquidity. I would love to see market will go below that low. It can come to the constant encroachment, that is also acceptable. Easily it can come over here to the constant encroachment. And determine the liquidity runs. Okay, so I'm going to repeat that one more time from the beginning. Okay, so I will talk about the buy side liquidity first, then I will talk about the sell side liquidity. In the meantime, if you didn't give me the like, please give me a like. Okay, that will help me. Right now price is over here. How do I know that price will go higher, or how do I know price will go lower? First, I'm telling you that price will go higher when I will be sure that market is going higher. When I will be sure that market is going higher. If I see market is going lower, or some kind of the Sunday open, at Sunday price opened over here somewhere, okay, below the current price. It opened somewhere here. Then it came to this fair value gap to the constant encroachment of this daily fair value gap. Maybe a little bit lower of the constant encroachment, that is also acceptable. I mean, it will work with this fair value gap, the lower fair value gap. It will work with that fair value gap, but it can't go through this fair value gap. This daily fair value gap, it can't go through that. Okay. If it go through that fair value gap, then I will start to think market is going to take that sell side liquidity until this last fair value gap is holding the price. The best option is it will come to the constant encroachment. That is the best option. To come here, it will go above this fair value gap here. When it will close here from daily chart, try to understand, brother, from the daily chart. when I will see a body close above this 15-minute fair value gap after working the sell side liquidity when it will close here, I will start to think market is coming here to take that buy side liquidity. First, it will go above that high, it will take that buy side liquidity, then it will go here and it will take that buy side liquidity. That is my expectation from daily chart. Hmm. I think I should. Is there any internet problem? I mean, can you hear me clearly or the voice is broken already? So this is the first thing I would love to see. Now, there when I will be in the lower time frame, I will discuss about this thing more briefly. It will help you again. Okay. Now, when I will expect that market will go lower. If market go low and break this last fair value gap, it will go below the constant encroachment of the weekly fair value gap and the monthly fair value gap high. It has to close below all of those lows. It has to be broken. Then I will start to think market is going to take that sell side liquidity. No, not directly. Okay, when it will close over here, maybe it will go above little bit some one more time, then it will go over here. But my expectation will be it is going to take that sell side liquidity. Gun to my head, I don't want to see that. I really don't want to see that. What I want to see, I want to see higher run and price will take the buy side liquidity. So this thing I don't want to see. Very simple thing. I mean, I have just tell you the way I read the price, and I think it shouldn't be confusing. Why it is doing this type of thing? Why the internet is not the. I don't know. The internet is rubbing me a lot. So this is the way I will read the price. I will think market is going to take that buy side liquidity. If it would love to go lower, it can take that high. If it would love to go higher, it can go below this 15-minute. I mean, sorry, below this daily fair value gap. Okay. So very simple thing, brother. Now I will go to 4-hour chart. I'd love to talk about the 4-hour chart now. Look at those lows, this low and that low. They're perfectly equal low. See these two low, they're perfectly equal low. What is this? This is the daily fair value gap. Okay. Now I'm going to remove this daily fair value gap. Why? Because I have another fair value gap from the hourly chart. I'm going to remove that. This is from the hourly chart. Okay, not from 4-hour chart. This is the 4-hour chart. Why I'm here? I would love to show you something. Price came here, it went higher, high, low, higher, high. When price went below that low, one more time. This is your breaker. This breaker is perfect. This is a perfect breaker. Why? Because this high has traded this parallel gap, and that has made this breaker very perfect breaker. Let's come to this breaker one more time. Above that breaker, there is a 4-hour fair value gap. This 4-hour fair value gap. A very clean sell side liquidity over here. See this low and that low. They are relatively equal lows, and that is very clean equal lows. Okay. From higher time frame, I would love to see a higher run. From lower time frame, I can see this breaker and this setup actually made me to think market will go lower and it will take that liquidity. Now, when I was at the higher time frame, it was difficult for me to see the price action from the daily chart. Look at the daily chart one more time. This is just indices indecision candle. That means I have a wick, very long wick below me. I have a very long wick above me. Body is over here. So it is kind of confusing price action. But when I'm at the 4-hour chart, this price action is much more easier to understand to read over here. Why I go to 4 hour chart? I never go to 4 hour chart, all of you know. But from the daily chart, it is confusing. So I have to come to the 4 hour chart. That is why I'm at the 4 hour chart. From 4 hour chart, I have seen this breaker. How do I know market is going higher or is going lower? The same thing one more time. Previously, I talked about the daily fair value gap. Now I will talk about something else, and it will help you to understand how to go from higher time frame to lower time frame easily. Okay, and don't forget 121 December candle. Fair value gap on 21 December candle. Why is 21 December? So you are talking about this fair value gap. I really don't know why you were suggesting me something. I really don't like that. Whatever. It's okay, brother. Just let me show you my thinking. Okay, I don't want to add your observation to my analysis. Please don't get hurt by my word, but I really don't want to add any of yours uh, observation to my observation. Okay, so I want to deliver my observation to all of you. That's all, brother. Please don't get hurt. If this breaker failed to hold the price and there is a very nice fair value gap from 4 hour chart, if it can go through that fair value gap, this is the kind of thing, I mean, to take that buy side liquidity, that buy side liquidity, that buy side liquidity, it has to fail to hold the price. If this breaker can hold the price, very little weak can come to the 4 hour chart, very little weak can come to the 4 hour chart, then it has to go below this breaker. What do I mean by that? That means something like this, and it has to close below this breaker from 4 hour chart. This is kind of sign that market is actually going lower and take this sell side liquidity first, then we will think about other price action. Okay, that means this time breaker is actually holding the price. I am just making the things simple now. From daily chart, that was very much confusing, but from the 4 hour chart, look how beautiful the price action over here. You have to go like that way. If you don't get the precise or very clean things from daily chart, that type of indecision candle, you have to go to 4 hour chart to understand the price action more clearly. When I will be in 1 hour chart, that will be much more clear. Okay, I'm just going one by one. Now I'm thinking about this breaker, this fair value gap. Now if you don't know how to mark the breaker, I'm going to remove the breaker. So there is no breaker. Okay, but I have a fair value gap. I need a fair value gap. If I don't have fair value gap, I have no direction, I have nothing, because the fair value gap is the heart of the ICT concept. Now I'm just going to remove this one as well, because I will talk about this fair value gap later. From 4 hour chart, I don't need that fair value gap. Right now I have a fair value gap over here. What I want to see, that means if price can come to this fair value gap, then it started to go lower. I will think it is going to take that low first, then this relatively equal lows. Look at those lows, they're very clean lows. It is going to take that. At the same time, I will mark the constant encroachment of this week. So if price can go through that constant encroachment, then there is 99.99% of the chance market is going to take that sell side liquidity. I'm not talking about this sell side liquidity. I'm talking about that sell side liquidity. Is that enough for your trade entry? I believe until here it is enough for you to take your entry. When price will be here, then you will start to think for other confirmation. At the same time, from the daily chart, I told you that if price can close below this monthly fair value gap high, constant encroachment of the weekly fair value gap and the daily fair value gap, if it can close over here, then you will start to think that market is going to take that sell side liquidity. Okay, from hourly chart, this is your target. This sell side liquidity is your target from the 4 hour chart. At the same time, you have to think about the constant encroachment of that week. What did I tell you about the week 50%? You have to use that 50% of the week as a 50% of the fair value gap. This is the consequent encroachment of this fair value gap. This is the consequent encroachment of this week. They work as the same way. Okay, they work at just the same way. Their job are 99% same. Don't don't think any other way how the weak consequent encroachment work. I don't care about anyone else, whatever, whoever tell you anything else about the consequent encroachment that it worked like in any other way. I don't care about that. I know how it works. It works like the 50% of the fair value gap. Try to understand, brother. You have to observe the price when it will be here. You have to think, you have to watch the price carefully over here. Does it want to go through that CE, or it would love to go higher from that CE? If you see any kind of sign, I mean the body close below this constant encroachment, then you start to think market is coming here to take that liquidity. If you see price is actually respecting the bodies, okay, the bodies are respecting this constant encroachment, you will start to think, okay, maybe market is going higher from there. It doesn't want to take that sell side liquidity. Instead of that, it will work higher first. Maybe later it will come and take that sell side, maybe later, but not now. So you have two level over here to the 4 hour chart. From daily chart, you have two fair value gap. From hourly chart, I mean 4 hour chart, you have this fair value gap and this constant encroachment. You are working both of them. Now, how do I know market is going higher instead of going lower? It will go through this fair value gap. Look at this fair value gap. It will go through that, okay? And it will start to go higher the same way I was thinking over here. I will just mark the constant encroachment. If it can go through that constant encroachment, there is much more possibility that market will go higher and it will take that buy side liquidity first, then it will go toward that buy side liquidity. The same way I will think the price. I know I'm just repeating the same sentence again and again. It is disgusting. I know that as well. I have nothing to do, brother. I have to repeat them for me, for you as well. I'm not teaching you, okay? I'm learning when I'm talking to you. I'm learning as well. I'm learning so many things when I talk to you about the price action. Trust me, brother. I learned so many things. So that's why I repeat some sentence again and again. I would love to say it will go through that 4 hour chart. It will go through all of this level. Okay. Why this constant encroachment? Why I care about this week constant encroachment? Okay, let me actually mark the constant encroachment from that week as well. So this is the constant encroachment of that week. Why I'm caring about that constant encroachment? You can ask me. Because I didn't talk about the constant encroachment of the week from the daily chart. We had a very big week. I didn't talk about over here. But here, why I'm talking about here? Look, where this constant encroachment placed at the level of the weekly fair value gap constant encroachment. So this is the 50% of the weekly fair value gap, and this constant encroachment are at the same level. Okay, not perfectly, but it is near, very near. So this level is very important. If price would love to go lower, it can retrace from there. So you have to see, or you have to observe the price from there very carefully. If it failed to hold the price, there is much more possibility market is going to take that buy, I mean that high, and then it will expand higher and it will take the buy side liquidity. So when price will start to go higher, I have I have to observe something little, okay? I don't need so many things to happen. If it can just go through one level, I will expect market will come here. If it would love to go lower, it has to break so many level, so many level. Why I need to get more level to be broken when it will start to go higher, I mean go lower? Because from the monthly chart I'm expecting prices coming here from monthly chart. So monthly time frame is much more important comparing to this type of lower time frame. That is why when price would love to will give me some kind of sign, very little sign that market would love to go higher, I will say market is going higher easily. But when it will go lower, okay, I mean its direction is lower, that is actually opposite of my monthly expectation. That is why I have to see so many levels has to be broken. Then I will start to think market is going lower, and eventually it is going to take that sell side liquidity. My expect market daily fair value gap next week. I guess so, brother. So that is from 4 hour chart. Now this from 1 hour chart. I would love to talk about the 1 hour chart now. Prices came here, price came here. It has taken the sell side liquidity from there. It is now at this last fair value gap from the hourly chart. So this is the last fair value gap from hourly chart. Price is inside this hourly fair value gap. It came inside this fair value gap, and it is just at the level of this hourly fair value gap. Now it is hourly fair value gap. Okay, don't be confused. This is now hourly fair value gap. Where price came here? Where did it came? I talked about this yesterday. This is the hourly fair value gap. Price come to this hourly fair value gap. It come here. What do you see? It has taken buy side liquidity. Very nice market structure shift. This is the last fair value gap. Price should, I mean, there is two fair value gap. Let me mark both of them. So this is the first fair value gap. This should be the breakaway gap. Body shouldn't close above the constant encroachment of this hourly fair value gap. Body shouldn't close above that constant encroachment. Then I have very clean sell side liquidity. Your entry has to be here. This is the expectation. Okay, don't think this is the entry setup. This is the expectation, and it should come here. That should be your expectation. Now, if you see this hourly fair value gap failed to hold the price, this setup didn't work. This setup, okay, market is, I mean, it has taken buy side liquidity, very clean my market structure shift, two fair value gap on above another, our well-known setup that should work as the breakaway gap. Nobody should have closed above the constant encroachment. It should expand lower. This is my sell side liquidity. That is my target. Now, if this setup didn't happen or if it failed to work, what should be your expectation? That means market is actually going higher because the perfect setup didn't work. When the perfect setup doesn't work, you have to think. You are bound to think that it is going higher without any setup, without any selling setup. I mean, sorry, the buying setup. It is going higher. We need the direction just from dollar index. We don't need the setup from here. We need the direction. And how do we determine our direction? By watching the setup for dollar index only. Nasdaq, that is different. Okay, this is the dollar index that is helping us to determine our direction, where dollar index is going. So right now price is over here. I will observe this fair value gap, how it works, and when it will fail, the last fair value gap will fail to hold the price. I will start to think market is coming here to this constant encroachment of that week. Now I am going to actually mark this week more perfectly from the hourly chart. I would love to do that, but it is at the same level. It is little above, so I think I can put it over here. Okay, just remember that is little above the constant encroachment of that week. So that is my target. First target is over here, that constant encroachment. If it fail to hold, this high will be my target. If it can go above that one with a very big run, I mean the clean run, I will start to think market is coming over here. Is it confusing now? Is it confusing, brother? If it can hold the price, this low is my target, then this constant encroachment, finally this sell side liquidity will be my target. Is it confusing? Tell me, brother, is it confusing? I'm going step by step from weekly chart. Now I'm at the 15-minute chart. I explained the same thing with more precise price action. I'm just making my target lower, lower, and lower because we are actually trading in 1 minute chart. We don't need to hold our trade from here to here. We don't need it, because from 1 minute chart, that will be if you take one contract, and if your target is, if you would love to take your entry here, and if you would love to hold your trade here, that will be maybe $50,000 profit, maybe. Okay, that is for the for example, maybe 100,000 profit. We don't need that on. We are happy to take some kind of meat from the bone. Now I'm here at the 15-minute chart, and you can see price came here to the hourly fair value gap. Now I don't want to mark the 15-minute fair value gap from there. I will just use this hourly fair value gap, but if you'd love to mark the 15-minute fair value gap, you can mark it from there. Then price went higher. At the same time, it came to this fair value gap. This is the last fair value gap from the 15-minute chart. This is this fair value. Look at this fair value gap. So this is the 15-minute fair value gap. This is the last fair value gap from 15 minutes. Do you see any other fair value gap over here? No, I don't see. It has taken all of the sell side liquidity. It came to this last 15-minute fair value gap. It went higher. What it has made? Relatively equal highs. What is that? That is the buy side liquidity. This high and that high, they're relatively equal highs. So the price has made the buy side liquidity. Okay. When it has made the buy side liquidity, what do you see? There is a fair value gap over here from 15-minute chart. There is another fair value gap above that fair value gap from here to here. That is another 15-minute fair value gap. Yeah, price can come one of this fair value gap, then it can take that buy side liquidity. It can do that from 15-minute chart. You will observe the price here. Maybe you will see Sunday open over here, somewhere below these two fair value gap. It opened here, then it started to expand lower. When it will break this low, after taking this buy side liquidity, when it will break this low, that is my market structure shift. I will get my market structure shift. My target will be here. Then before coming here, I will observe this order block. Can it go through the order block or the min threshold of that order block? If it can go through them, this low will be my target. Then this hourly fair value gap constant encroachment. Finally, this week constant encroachment. There is my sell side liquidity. Everything will be my target. This is the last 15-minute fair value gap. This is the swing low, only swing low. If it is broken, I am going to target that one. It can happen both way. Okay, it can just take the buy side liquidity from there, then it can give me the market structure shift, then maybe some kind of fair value gap over here, then it can expand lower, or it will just, let me see, it can come any of this fair value gap, just any of those, maybe just here. Okay, then it can come here and take that buy side liquidity. Before taking the buy side liquidity, if I see price come over here, it has taken the buy side liquidity, then this is kind of setup. I will get it if inside the session I'm going to take the sell for Nasdaq or even S&P or any other market. Then I will observe the price, how it will go through this 15, I mean the hourly fair value gap. If it can go through that hourly fair value gap, either I will wait for this type of setup, I mean consequent encroachment retracement, price will come over here, then it will go through this like this type of setup, or very clean buy side liquidity, I mean the buy setup. After taking the sell side liquidity, market structure shift, very nice fair value gap. Market is going toward that constant encroachment from the daily, I mean the hourly chart constant encroachment. Then finally this high, that will be my target. Simple, brother. So that's end for the dollar index. I will go to the Nasdaq now. Before going Nasdaq, I would love to ask you the question: is it clear to all of you? Is it clear? Do you get any kind of idea? I'm not telling you this will happen. This is my expectation. This is how I read the price. This is how I do the top down analysis. From monthly chart to 1 minute chart, I go like that way. Here 15-minute chart is enough for dollar index, because you don't need go below the 15-minute chart. I don't think it's important to go below the 15-minute chart, because you just need a direction. 15-minute chart is enough, I mean the lowest time frame for me for the hourly chart. But my question is it clear to all of you, brother? If you don't reply, I will think I'm just wasting my time and also your time. So you have to reply me that if you have any confusion, or it is clear, or you got the point how to do it by yourself. I won't be here for the lifetime, ma'am. I won't be here for you. I'm just trying to not teach. I'm not teaching you anything, okay? I'm not teaching anything to all of you because all of you are much better trader than me. Comparing to me, you are much better. I believe that you have much more strong psychology comparing with me. You will be the best trader one day, very soon. I believe that. So in any way, you are the best comparing me. So I'm not able to teach you anything. What I'm doing here, I'm just sharing the way I read it. I'm doing the thing I have learned by myself. Maybe you need just a direction. If you get the direction, you will do better than anyone else. I believe that. Okay. Uh, yes, it is clear. Thank you, Remy. Edwin, thank you, brother. Thank you, Dono. And you, Roy. Thank you. Thank you, brother. Thanks to all. So this is the top-down analysis, and you have to do it by yourself. Every single time frame, you have to break it down. We're here to stay. Costa, how are you, brother? I hope all of us will be a very good family. We will never leave each other. Family members doesn't leave another members. So we'll be here for so long, inshallah. Every time frame from monthly chart. I didn't go to monthly chart today because that is not important today. Okay, we need only the weekly chart. We need it from the weekly chart. That is why I didn't came here. But you can see price came to the constant investment of that week. Then it started to go higher. That is the monthly I fair value gap. I am expecting price will come here, and this monthly fair value gap will hold the price. Then it will send it back lower to this fair value gap. That is kind of monthly expectation. Okay, it can take 1 year to happen. If it fails to hold the price, then it will use as a supportive inversion fair value gap. Then this buy side liquidity will be triggered. That is different thing. Right now, I'm thinking market will come at least to this monthly I fair value gap. Then I go to the weekly chart. Then from weekly chart, I explained what I'm expecting. Price came to this last weekly fair value gap. Body didn't close below the constant encroachment. It should come to this weekly fair value. Forget about this weekly. Not sorry, not forget. I'm sorry. So it has come to this fair value gap. In my opinion, this fair value gap is not important. Okay, this fair value gap is not important. But we got some kind of reaction from that fair value gap. That is expected. Price should go through this fair value gap. It should come at least to this weekly fair value gap. And because the monthly I fair value gap at the and the weekly fair value gap, both of them placed at the same place. Okay, it is at the same place. So I'm expecting price will come over here. But if this fair value gap can hold the price and send it back lower, then I will expect market is coming over here. Then I went to daily chart. From the daily chart, I told you when I will expect market is coming here, or when I will expect market is going to take that daily sell side liquidity, not the weekly one. I'm talking about this daily sell side liquidity. So when I will expect market is going toward that sell side liquidity. Then I went for 4 hour chart. From 4 hour chart, I have shown you how I read the price from 4 hour chart. Just let me mark the uh, breaker, because I will observe this breaker personally. Okay, so I would love to use them to my chart. So I would love to see how this breaker will hold. This breaker can hold the price and send it back lower for toward that hourly sell side. Now previously I had daily sell side. Then before that I had the weekly sell side. Then daily sell side. Now I have the hourly sell side. This is the hourly chart. 4 hour chart, 4 hour breaker, for 4 hour fair value gap above that breaker. I will see both of them. I have this constant encroachment and this constant encroachment at the same level. I will target both of them. The way price will delivered, I will take my decision. Then I went 1 hour chart. So from 1 hour chart, I have shown you how to determine the bias because it has taken the buy side liquidity. It has given you very nice market structure shape. This is your two fair value gap. It should work as a breakaway gap. If it failed to hold the price, instead of that, if price can go above that, then this constant encroachment and that high will be my first target. Okay, so that is also important because at the same level there is the weekly fair value gap constant encroachment. This is from the weekly chart. Then I came to the 15-minute chart. Let me actually come over here. From 15-minute chart, I have shown you the precision. There is my buy side liquidity over here. This is to fair value gap. How I will determine that market is going to take that buy side liquidity, or if it will have to come lower, when I will determine that market is coming lower. See this 15-minute fair value gap, where did it placed? At the low of the breaker. So if price can go through this 50-minute fair value gap, this will go through the breaker as well. That means if I see a body close below the breaker, it will help you that market is coming toward, I mean, over here, because I will say breaker is holding the price. Last 50-minute fair value gap failed to hold the price. Everything is telling me market is coming lower. If it can't go below the breaker, I mean breaker low. Instead of that, if it can go above to this fair value gap, okay, the hourly fair value gap, this is from the hourly fair value gap, and these two black line, where is the another black line? I think I removed that black line or something, or it is here somewhere, whatever. That was the 4 hour fair value gap. If it can go through that, that means this breaker failed to hold the price. At the same time, 4 hour last fair value gap failed to hold the price. This hourly fair value gap failed to hold the price. Everything is telling me market is coming toward that consequent encroachment of the hourly week. If it can go through that hourly week consequent encroachment, then this high will be my target. But if it can go through this, that means this breaker is holding the price. This hourly breakaway gap is holding the price. This 4 hour fair value gap is holding the price. This last 15-minute fair value gap failed to hold the price. At the same time, I got the market structure shift. Look at this low market structure shift. Everything is telling me market is going lower. This is my liquidity from the hourly chart. I mean above that liquidity level, I have this constant encroachment. That should be first target. Then this target. In my opinion, this is the cleanest explanation of the top-down analysis for dollar index. And thanks for your reply, guys, that you understand whatever I told you over there. Nothing is certain. Everything can be changed after the Sunday open. I'm not telling you that this will happen, okay? I am just telling you the expectation, the way I expect price will react. If price react in any expectation, any of my expectation between both of them, I will take my decision depending on that price action. Very cool, yeah. So before going Nasdaq, what pairs do you trade? Favorgus. I trade Nasdaq, brother. But from February, I will move to mini S&P. But right now, until February, I will trade Nasdaq. And yep, that's the thing, brother. 115-minute price action is in discount of this PDRA. Brother, I don't count PDRA. I mean, PDRA is very nice, very beautiful. I believe the premium and discount array, if you can understand them, then it will help you to take your entry precisely. Okay, so you please search on YouTube. I hope you will find more information about the PD array, premium discount array. You please learn from there. Okay, I don't trade depending on the PD array. I love to take my entry to the deep premium. I mean the buy entry. I even I take my sell when it is at the deep discount. Okay, I take the sell. So if you ask me about the PDRA, I'm not a great fan of PDRA. So I'm not telling it is good. I mean it is bad. It is obviously the best. But what you have to do. You have to search other people. I mean maybe ICT or any other ICT student, whoever describe the PDRA perfectly, please go with them and learn it from them, okay? Because I won't be able to tell, I mean talk about the PDRA. I don't count the PDRA. That is my life, my rules, okay, brother? So don't get me wrong. That is my life. I mean, this is my life and this is my rules. So I don't go for PDRA. I do. So here is the Nasdaq. Okay, so before going Nasdaq, I would love to go to UAVs. I would love to come to USD first, then I will go for. Uh, guys, just give me 2 to 3 minutes. I'm just coming back. I need to drink some water and I need to remind my mother that she should take her medicine. Okay, so I'm just coming back. I hope you will forgive my forgive this. Okay, please forgive me. I'm just coming back. Welcome back. Sometimes I feel like I'm just wasting your time. I feel it, okay? So you told me that no, brother, I don't waste your time. But sometimes I feel like that way because I feel guilty if I can't provide some new information to all of you. I feel guilty. I'm here, and some of you are waiting here for me to give you some kind of new information. Uh, it made me responsible. I don't wanna be responsible for anything. To be honest, brother, I'm not that kind of person. But it is what it is. Now, the topic was I would love to talk about the trading psychology and the next week price action, both of them. So I talked about the what's the uh, price action over there for the dollar index. I would love to add some trading psychology first now. Then I will go to Euro USD explanation, and then I will go for the Nasdaq. First thing first, okay? I'm here not to compare myself with any other trader. I told you others that I'm not the best, not even better, not even good. I'm the worst on. I know nothing about the price action, nothing at all. Okay, to be honest, brother, I know nothing about the price action. What I know is how to expect something. I did this to my real life as well. Whenever I do something, I go somewhere for some kind of job. I don't know what that job will be or how I will manage that. I really don't know. I don't have any idea about that. But I expect something that maybe when I will be there, I will get some kind of direction that will help me to understand how can I expect something from there. Then I will work with my expectation. If it doesn't work, I will just leave that job, or I won't do that. I will just come back. That is the thing to my real life. And now when I'm at the chart, I do the same thing. I expect something. Yeah, I learned how to expect. I learned that, but I didn't learn the price action. What I have learned, how to expect something from this chart. If the expectation works perfectly, I go for trade. If it doesn't work, then I don't do anything. I just wait. When I am live, you will see I take 2, 3, 4, 5, 6, 7 entries. If you ask me, I take only one entry to my live account. Never ever you will see if I get one winning entry, I'm not interested to take another entry. Never ever. So why I do that in front of all of you when I'm live? Why I do trade for 2, 3 times? The reason is to show you when this setup happened, maybe some of you will not going to mark that. Maybe because everyone's thinking process is different. So you are not willing to see this setup. There is a water block setup. You didn't see it. No problem. Then there is a fair value gap setup. So I trade or I take entry over there as well. So whoever missed this entry, they will think, oh man, I have missed that entry. I have no way to take another entry. But actually there is another entry. Maybe you are not a very fond of that entry. You are not familiar with that entry, but you are familiar with this fair value gap entry. So I took that entry so that you can understand this could be your entry. Whoever has determined that this is the perfect entry, you can learn that entry, but you are not allowed to take that entry as because I took both of those entry. So try to understand the thing, brother. You are not allowed to take both of those entry, but you can train yourself to see that entry, because when you will understand the fair value gap entry and the water block entry, I'm just giving you an example. When you will understand both of those entry, you can compare which one is more perfect, which one works more most of the time. Then you can think, okay, I'm not going to take that entry. From now I'm going to take that fair value gap entry, or I'm not going to take that fair value gap entry, but I'm going to take that entry because that works most of the time, or that works most of the time. That is why I'm taking this entry as well, this entry. This is because I'm not trading for myself, I'm trading for all of you. So everyone will see the trade entry different way. Sometimes when I tweet something to my Twitter that I'm expecting this, I'm expecting that, now I'm expecting market will go higher or market will go lower, some of you will give me a screenshot, brother, I saw this entry, is that entry valid or is that entry invalid? Sometimes I tell you, brother, please don't take that entry. I don't see this. Why it is loading? Because of my internet. internet man. Can you hear me? I mean, can you hear me? I had a very bad internet, so can you hear me or not? Okay, please let me know that. So whenever I tweet something over here, maybe sometimes uh you actually post your entry video or your entry screenshot, and I told you that no, brother, that is not a perfect entry. Sometimes I tell you this is the perfect entry, or the way you have read that entry, that is perfect. So please don't mind whenever I say that this is not a good entry. I'm not judging you, okay? I'm not judging you. I'm comparing that entry with me. If I were you, I would take that entry, or I would just skip that entry. That is why I tell you, brother, this is not right. You shouldn't do that. But maybe, maybe that is the perfect entry you have seen. This and that entry actually worked most of the time. So don't listen to me. You strict with your entry, please. This is my request, okay? I'm not always right. I'm not someone who can tell you you should do this, you shouldn't do that. I'm not. I'm no one tell you that. Okay, you will take something from me if it helps you to trade. If it doesn't help you, just throw them out to the dustbin. Okay, and my request is please don't mind if I tell you please don't take that entry, because in my opinion that is not the perfect entry. In my opinion that is the perfect entry. Please go for that. I talked about them because whenever you show me something, trust me, brother, whenever you message me something, I'm not going to show over there whoever messaged me, because I got some message that is not, that shouldn't be public. Okay? That's why I'm not going over there. But whoever messaged me, see, there is no, see over here, too, there is nothing, because I replied. I reply every single one. Even if I'm busy, I try to reply all of you. C means consequent encroachment. That means the 50% of the fair value gap. So this is the 50% of the fair value gap. You see the dotted line. That is the 50% of this fair value gap, and it is called consequent encroachment. And this is also the 50% of the week. See from the monthly chart. This is the 50% of the week. Look over here. The week from here to here. This is the 50%. It is also called the consequent encroachment. Okay. So whatever. So whenever I tell you, please don't do that. If you think it is helpful for you, take it. But please don't take it personally, and don't think this guy is judging me. No, I'm not. I don't judge any of you. I don't do it. Never ever I judge anybody in my life. All I care about is your success. That is the thing. That is why I shared my opinion with all of you. So I hope that will be clear, and you will understand my my feelings or my thinking. Please don't mind, okay? Now, what about the trading psychology and what I have started? The thing I have started over here, I have learned this process from ICT, okay? And in general, ICT has talked about so many things to his core content. He has explained so many things. For example, water block. Whenever you asked me about the water block, I told you, brother, I don't want to talk about the water block. Why? ICT talked about order block in his core content, right? He talked about over there. Then why you asked me about the order block? That is the same thing, right? ICT talked about order block in his core content. Then why you asked me about the order block over here when I show you something from the order block? I mean, I show you sometimes the order block. Why you ask me? The reason is in core content he has just give the general information. Whatever he talked about in his core content, that is the general information. That means when you will watch that video, the water block video or rejection block video, maybe breaker block video, every single thing you will get from the ICT core content that is for general. Every single person will get the same information. Now, you have to do the back test or you have to do the forward test and you have to find out when that thing works. For example, I will teach you 1 plus 1 is equal to 2. This is general thing, right? Now, you have to understand how you will use that general information when you will do some kind of bigger math, like 101 plus 101. How what will be the result? That means 202, right? You have to find that out from that general knowledge. I will teach you how to count from 1 to 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. That is called core content from ICT concept. ICT just taught us how to count from 1 to 9. You have to learn how you will go above 9. That means 11, 12 to 99 or 1000 or million. How you will count them. That is why the general knowledge is useless. To be honest, that is useless. You will get the general information from there, but you have to find it out how it works. The water block, how it works. Okay. Body, what did you say, Edwin? The constant encroachment is used for wicks or tails. What do you mean by tails? The wick. See the wick from here to here. This is the wick. You have to mark the wick only. I don't know what is tails. I'm very oh, look that wick from here to here. So this is the constant. I mean, this is the 50% of the wick is the constant encroachment. Okay, and I really don't know what is wick. Can't you hear me? Oh man, you should have. I mean, uh, just try one more time, brother. Because if you still not listening to me, then I will check. Okay, I hope you can hear me. Mean threshold is used for candle body or travel. Mean threshold is the 50% of the water block, and that should be from week to week. So from here to here, the 50% is the mean threshold of a water block. Water block 50% is the mean threshold, or the breaker block 50% is the mean threshold. Rejection block 50% is the mean threshold. Every block 50% is the mean threshold. Okay, proportion block 50% is the mean threshold, and everywhere you have to mark. I mean, for the water block you have to mark week to week. For the rejection block you have to mark from opening or closed to I mean to the week high. Okay, you have to mark them for the rejection block. So it's different, but for order block you have to mark from week to week. I hope you can hear me. I mean, the sound is perfect. So what I was talking about over there. So order block. Why I don't talk about it now? So many YouTuber, so many YouTuber has explained the order block. Why I don't? The reason is I heard to say ICT told that. I mean, wicks are top part of the candle and tails bottom part of the candle. Wicks are top part of the candle and tails is bottom part of the candle. Okay, so if you would love to mark the constant encroachment from the tail, that is the same thing. If you would love to mark the constant encroachment from the wick, that is the same thing. So 50% of the wick or 50% of the tail, both of them are the constant encroachment. Okay, brother. ICT told that people use his water block theory wrong way, in a wrong way. Okay, he talked about this so many times in his life, in his teaching, in his mentorship. So many times he has talked. He talked about this. Now, why he talked? He told that. Why he told that? When he has already teach us, he has already taught us about the water block to his core content. The reason is core content is the general thing. Okay, so when you will get some information from the core content and you will start to teach them in a wrong way, that is wrong. That is not good. Okay, ICT didn't clear about the order block. Don't believe me? I have no idea where I will find that videos. I have no idea. Please watch all of these ICT's 2023 mentorship. You will find at least 10 times ICT talked about them. That he will disclose about the order block to his book. That means he knows most of the people are using his order block theory in a wrong way. Now, if I talked about this, I know I still never see my channel. He will never look my videos. But by anyhow, if he see that I say something about the order block and that is not correct, I feel that disrespect to him. That is why I don't talk about the order block. Whatever I have learned about the order block, I learned it by my observation. By watching the same thing again and again, then I have learned it. So I'm waiting as well, like you, for his book. When he will release his book, I hope everyone's confusion will be cleared and everyone will understand what is water block actually is. And I will also see that am I right or I was wrong. Okay, that is the reason I don't talk about water block. If you would love to learn about the water block, only the water block I don't talk about. So if you really would love to learn about the water block, you are free to go to other YouTubers who ever explained about the water block. Please watch them. There is no bound or there is no restriction to go over there. You are free to go over there. Now, if you ask me, I don't watch others' video. I don't want to learn from others. Now, you can tell me, brother, you are some kind of egoistic person. Because you are not willing to learn. Obviously, I am willing to learn, but I'm not willing to learn from someone who have learned from the place like ICT. So that is the reason I don't watch others' video and I don't see others helpful. They don't reply. Trust me, brother. When I have started to learn this thing, I messaged so many YouTubers. Whenever I get some kind of confusion, I messaged them. They ignored the things. Okay, whatever my question is, they ignored them or they gave me some kind of answer that is useless. That is why I stopped to watch their video, because they don't clear the confusion and it hurts me. That is why I stopped to watch others video and I started to rely on myself, because nobody is actually going to help me. If there is anyone who can help me, that is me. That is why I stopped to learn or watch others video. Now, if you say I'm egoistic, you can tell me that I'm egoistic. But if ever you will message me to my Twitter, if I'm okay, if I'm not sick, if I'm not too much busy, I will reply you. I will reply you for sure. Okay. If I'm okay, if I'm alive, I will reply you. I face that problem. That is why I don't want you to face the same problem from me. That's the reason. If somebody talked about me that I make some kind of rules that doesn't work, that is wrong. ICT never talk about that. If you believe them, I am telling you, please go to them and please watch them. Leave me alone. I'm not forcing any of you to stay to my channel or to my Twitter. Please stay over here. I'm not requesting any of you. I'm not begging. I'm not telling you. I'm not doing anything over there. If you would love to stay here, you can't judge me. You can't tell me something to do. You can't do anything. Whatever I'm doing it freely. Okay. Don't think that nobody told me to start the private mentorship or something like that. I don't want to do that. I am doing this thing because of my inner peace, because of my own satisfaction, not for earning money from here, from mentorship or from YouTube or from any other place. I am not doing all of these things because of money. I'm doing this because I face some problem. I don't want you to face the same problem. That is the only reason I'm here. I'm doing this bullshit. I'm wasting your time. I don't know you got my point or not, but and this is useless talking. I know that I shouldn't talk about them, but sometimes I feel that. Okay, I saw some YouTubers, they got more viewers. Do you, if you ask me, brother, are you upset when they're getting more viewers comparing with you. No, I'm not upset. The reason is whatever I'm doing, nobody's doing over here. Not even a single person is doing over here. Nobody's teaching you what you should do. They are just showing you some perfect entries. They are showing you something that happened perfectly. They're showing it to you. But what I am giving you is, sometimes I told you that market is coming here to here, okay? Beforehand. Beforehand, I'm telling you market is coming from here to here. Now, when price delivered over there, I am not telling you price, see, price came here to here and that was the setup. I was very much perfect, nothing. If that setup is not valid, I tell you directly, this setup is not valid. You are not allowed to take that entry. That is gambling. I'm telling you this. So I'm not here to show off. I'm here to tell you when you should take your entry, when you shouldn't. Even if I'm right, I'm not telling you to do some wrong thing, which you will never find from any other YouTuber. I can guarantee you. Not even a single YouTuber will show you or tell you that you shouldn't take that entry even after marking them beforehand. Nobody is going to tell you that. I'm doing that. Remy, are you here, brother? Remiges or Hans, anybody? I mean, until now I saw both of you who are with me for long. If any of you are here, please write it down. Did I do that or not? When I showed you something that market is coming from here to here, and there I took some kind of entry. After that, I told you if that was my real account, I wouldn't take that entry because that is not valid. That is not perfect entry. You shouldn't do that. That is gambling. Did I tell you or not? So that will be helpful for the viewers. There are some people I don't know. Yeah, I mean, all of you are with me for long, or some of you are new here. So that will help them to understand what I'm actually doing here. Any of you are here, please confirm that. If I lie, tell that over there that no, brother, you are lying. Trading psychology is more important comparing the price action. Going time frame from every time frame, okay, from weekly, daily, 4 hour, 1 hour, 15 minute, 30 minute, 5 minute, 4 minute, 3 minute, 2 minute, 1 minute. That is forcing market. I told you beforehand. I told you that long time ago that if you just switch your time frame, that means you are actually forcing market to give you a setup. You are hurried to take a setup. If you do that, you will be a loser, long time consistent loser. You can't be the winner. That is impossible. You have to be strict in a simple time frame. ICT told is in his 2022 mentorship that you have to start to find your setup from 5 minutes, 3 minutes, 2 minutes, 1 minute, 5 4 3 to 1 minute. Okay. Did you ever see ICT took an entry to 4 minute chart, or when he has started that mentorship, he used to take entry to his 2 minute chart? Did you see he has taken 3 minute entry? Maybe rarely. Rarely. One out of thousand he took an entry from 3 minute chart, maybe from 4 minute chart. When he has started to take entry from 1 minute chart, he used to take his entry 1 minute chart, rarely 5 minute chart. Most of the time in 1 minute chart. Why he do that? When he told that you have to go from 5 4 3 to 1, then why he doesn't take his entry from 4 minute chart? Because he don't force the market. You can go to all of those time frame to understand the price in a better way. But trust me, you are not that much experienced to switch your time frame and understand the price action. Even if you ask me, I am not even allowed to go so many time frame. That is why I always stick to 15 minute chart and 1 minute chart. Rarely I go 5 minute chart when I don't see anything from 15 minute chart. Then I go 5 minute chart. Maybe in 1 year I go 5 times in 5 minute chart in 1 year, and rest of the days I stay in 15 minute chart and 1 minute chart because I'm not hurry. I'm not forcing market to give me a entry setup. I don't need that. This is the psychology, brother. You have to work with your psychology. If you don't work with your psychology, whatever you are learning over here, that is useless. So please don't force market to give you an entry. That is a request, brother. I don't know if you get something important from this bullshit rubbish talking. If you don't, I'm sorry for wasting the time. So let's go to the Euro USD next week bias. Last week I told you that market is going from there. I mean, from that last fair value gap, it is expanding lower. I told you, and you can see price went lower. Where did it came? I would love to mark the order block here and later. Just remember this is the order block. Okay, so price came to this order block, and this is the reaction from that order block. Do I want to see that? No. I would love to see it will go through that order block, the mean threshold of the order block. Then it will go through. I mean, toward the. I mean, below that low. Finally, it will take that sell side liquidity. That is my expectation from higher time frame, from the weekly and monthly chart for the Euro USD. Here, I don't want to talk anything from the weekly chart. I would love to add one more thing, okay? Not everything, but I would love to talk one more thing. If you would see price is going higher, am I going to change my bias? No, I'm not going to change my bias until this fair value gap is broken. I would love to take sell, not buy, until this fair value gap is broken. If this fair value gap is broken, if I see a body close above that fair value gap from weekly chart, I would love to see higher run. Until then, I'm expecting lower run toward that sell side liquidity. Let's go to the daily chart. So this is the daily chart and this is the order block. If you remember from the weekly chart, this is the order block. The market, if I can or not. Okay, so that is the order block. Price came here to the volume balance. That is the volume balance. This is the daily fair value gap. Price failed to go to that daily fair value gap. It came to the consequent encroachment. Then it went lower. This is the weekly fair value gap. See, price went lower. It failed to come to this daily fair value gap, and then it went to this daily fair value gap. This is the daily fair value gap. Come to this daily fair value gap, consequent encroachment. No, not perfectly. It didn't touch the consequent encroachment. When I will be in the lower time frame, you will see that it failed to touch that consequent encroachment for near about 14 pips. Okay, it's just below 14 pips of the consequent encroachment, but it's okay. It came to this daily fair value gap. It went lower and it closed over here. Do I see anything over here from the daily chart? No, brother. I don't see any single thing from here daily chart because this is the indecision candle. Though it has taken, I mean, it has traded this fair value gap. I'm expecting lower run because it didn't come to this daily fair value gap. It failed to come over here, but it has traded the consequent encroachment of the daily fair value gap. I would say like that way. Though it failed to touch the consequent encroachment, but I would say it has been rejected from the consequent encroachment. Then it went lower and closed below this fair value gap. That is kind of sign that market would love to go lower. From weekly chart, I saw price didn't break this weekly fair value gap, the last fair value gap from the weekly chart, and it went lower. It has made this fair value gap. It should expand lower toward that low. That is my sell side liquidity. There is my sell side liquidity. Very clean sell side liquidity over here. Finally, this is the sell side liquidity. Every single sell side liquidity is my target. Here I have nothing to see. When I'm confused about the daily chart, I would love to go to 4-hour chart. So from 4-hour chart, this is the hourly chart. So I would love to, okay, just let it stay over here. Okay. So price actually came here. It has taken this sell side liquidity, this low and that low. They are relatively equal lows. Price has taken that sell side liquidity. What it has done? This is the shallow run. In my opinion, this is the shallow run. If I see this type of shallow run, that's that level. Okay, so this shallow run is more strong sell side liquidity. I repeat this so many times, so I'm gonna repeat this one more time. If I see that type of little run below the sell side liquidity, I mark them as my strongest sell side liquidity. Market has 99% of the chance to take that sell side liquidity. It went higher. It has traded this daily fair value gap at the same time, the 4-hour fair value gap, and then it is here. Okay, now I will see the consequent encroachment of this week. If it can go above, I mean, if it would love to go higher, the consequent encroachment of this week, okay, and the low of the daily fair value gap. These two level should be the last line for going higher. It shouldn't go above that. It shouldn't go. I don't know how to make it more simple. You have to think the dollar index at the same time. Where dollar index, I was thinking my dollar will go higher. Okay, go over there one more time. Dollar index. So this is the dollar index. If it would love to go little lower, remember the 50-minute fair value gap. This, let me go to the 50-minute chart directly. So this is the 50-minute fair value gap. That means dollar can come to this one of this 15-minute fair value gap. It can come on of those level. When dollar will expand lower, every other market will expand higher. Okay, you have to compare dollar index with other markets. If you forget everything over here, you are at the middle of the sea. You have no direction, you have nothing, you are just wasting your time. So when dollar is coming here to any of this fair value gap, that is the low run. When you are getting the lower run to dollar index, you have to expect the higher run for the for other market. Okay, so it can go high to the constant encroachment. Sorry, what happened? Let me go to the 4-hour chart one more time. Sorry. So it can go high, okay, because dollar is going lower to that 50-minute fair value gap. Now that is a very small run for dollar index. I don't care. A very small run for the dollar index can happen. I mean, it can make a very big run for other markets. It can do that. Okay, so when dollar is going lower, it can go higher. Where it can go to this level, that specific level, daily fair value gap low, maybe constant encroachment of this week, and when I will be in hourly chart, I will make that more precise. Okay, so dollar is going to that 15-minute fair value gap. It is going over there. I'm not thinking market is going through all of this fair value gap. When I will start to think, when dollar will fail, I mean the 15-minute fair value gap will fail to hold the price. Remember there was a swing low. I will mark that as my market structure shift. Over here, I will start to think, okay, market is going higher when I will see daily fair value gap constant encroachment has broken. Market went above that. Body closed above there. I will start to think market is going higher. Same thing, brother. If I say market is not going higher, that means dollar is not going to that 50-minute parallel. Instead of that, dollar is directly going higher. That is good because from monthly chart, I'm expecting higher run. Here from the monthly chart, I'm also expecting lower run. It can happen, but though I don't want to see, I would love to see some kind of higher run first. Maybe it will take that buy side liquidity and then it will expand lower. That is my expectation. When it will start to go lower, I will mark this constant encroachment of that week because this is the last week and the longest week. I will mark the constant encroachment. If the constant encroachment failed, this sell side liquidity will be my target. Okay, that is when you will be inside the trade. You have to manage your trade to those levels. Okay, now I would love to go to 1-hour chart. So this is the 1-hour chart. I'm going to remove this 50% level and this daily fair value. I'm just going to make more clean chart. Okay, I love to use the clean chart. So core price came to this fair value gap. What is this fair value gap? From here to here. Now some of you will tell me the PDR, right? So there is your range. This is the 50%. right? So above here, this is the premium. I mean, yeah, this is the premium. That is the place for sell. This is the place for buy, right? The premium and discount arrow something. Trust me, brother. I really don't see price like that way. I read the price through my fair value gap. You can see there is a hourly fair value gap. I have this fair value gap. Price trade that fair value gap. It went lower. It coming lower, 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 and it come here at last. Finally, it came here. Do you see any other fair value gap except this fair value gap from hourly chart? I don't see. I can see this fair value gap. There is only one fair value gap. I give the priority to my hourly fair value gap. Okay. Now, yesterday I was bullish for Nasdaq, so I mean bearish for dollar index, so I was bullish for every other market. It went higher. Now, if you say brother you took your buy to the deep discount, no, I wasn't buying for deep discount. I've already uploaded the video. The thing was the narrative, the Friday's narrative. Friday's narrative was telling me that market is going higher because it has to go inside the range. I mean the weekly range. It has to go inside that weekly range. That is why I was actually buying. However, let's come here to this hourly fair value gap, and perfectly it has traded over there. Then it went lower. It came to this fair value gap. Look at this fair value gap, the hourly fair value gap. Okay, so it came to this fair value gap. I would love to see some kind of reaction from that fair value gap. Let me mark it actually, easier for you to understand. So everybody has come to the consequent enclosement of the hourly fair value gap. I would love to see some kind of higher run first. That is kind of fair value gap reaction. This fair value gap is important. This is fair value gap, so it is important actually. I would love to see some kind of reaction from that fair value gap, and that reaction will bring the price over here, the consequent enclosement from the 4-hour chart or the lower part of the hourly fair value gap. It will bring that over here. You remember the daily fair value gap low is also over here. So that is the reaction from that fair value gap. I would love to see that. If it can come over here, then when this fair value gap, when market will go through this fair value gap, I'll be 99% of, I mean, sure that market is going to take that sell side liquidity, and finally it will reach to this daily fair value gap. Anybody has any confusion? First, I would love to see some kind of higher run. Then it will go through this fair value gap. When it will be able to go through that fair value gap, I will be sure that market is going to take that sell side liquidity, and finally it will come over here to this daily fair value gap. If this fair value gap can hold the price and price went above that high, I'm going to think market is going higher to this fair value gap one more time, because it has worked that fair value gap in a little way. I mean, it didn't trade that fair value gap perfectly. So I would love to see higher run, and it will come over here to this hourly fair value gap. When I will think that when this high will be broken, then I will start to think that things. Okay, I really don't want to see that. I would love to see lower run. Yes, you told these things, and and showed its if setup is valid for you or not. Sorry, also quite because of some family stuff now. Okay, no problem, brother. No problem, not at all. But thanks for confirming that, Remy. Oh man, I'm really I'm sick now. The cold is very bad. Whatever. I hope this is clear to all of you guys. I mean, there shouldn't be any confusion. I would love to go 15-minute chart. So from 15-minute chart, you can see. Let me put a block. Price came here. You remember when I was live with my dollar, I mean Euro USD, I was trading over here. I saw this and I told you market is going above that high to that hourly fair value gap, specifically to this 15-minute fair value gap. So this is the fair value gap from 15-minute chart. I told you, if you were with me in my live that day, I think it was in Thursday. So far I remember that was Thursday. Okay. So I told you that market is going toward that hourly fair value gap because I saw this, and that made me to think market is going to go above that high. Bullshit. Internet is very disturbing. Whatever. If you remember or not, I don't remember. I don't know, but I told that to all of you. So it came to this 50-minute fair value gap. The body closed. I mean, to this 50-minute fair value gap. Above that 15-minute fair value gap, there is another 15-minute fair value gap. That should be the breakaway gap. It price shouldn't go above the constant encroachment of that 15-minute fair value gap. I hope it didn't go, but I don't want to mark that on because that is not important at all for me. I got the precision from this 15-minute fair value gap, so I'm going to use that 15-minute fair value gap. It came lower, make the relatively equal lows. Look, this low and that low, they are relatively equal lows. Where price went? It went above to this 15-minute fair value gap. Now there is a water block. I will show it to you. But just give me some more time, okay? So price came, sorry, price came to this 15-minute fair value gap. It went lower. It has made this constant encroachment. I mean, so not constant, this sell side liquidity. Now, if it would love to go higher, I would love to see that. But this high, look at that high. If it is broken, I mean, this 15-minute fair value gap failed to hold the price. There is much more possibility price will come over here to the constant encroachment of this week. Remember from the 4-hour chart, there was the constant encroachment from 4-hour chart. Okay, there was a constant encroachment of the week. So if this high is broken, that is my market structure shift. I will look for some kind of fair value gap over here. At the same time, price has to close above the 15-minute fair value gap because this is the last fair value gap from this run. That is the last fair value gap. If price can close above that 50-minute fair value gap, I will get the market structure shift, and I will look for some kind of fair value gap over there. This will be my inversion fair value gap as well. I will use this inversion fair value gap or the new 15-minute fair value gap for take my buy, and my target will be the constant encroachment of the 4-hour chart. I don't want to see that. If it would love to go higher, obviously it can come. I mean, it can do that. All I want to see is lower run. Now, when I will see it, I mean, see the lower run over here, I don't want to see this high is broken. Altogether, I don't want this high is broken. If this high is broken, market has much more possibility to go higher and take some kind of buy sell liquidity from there. There is the 50-minute fair value gap, also some inversion fair value gap over there. Price will reach over there to that hourly fair value gap. Price will go over there if this high is broken. I don't want to see that. If it would love to go higher, it can come to the lower part of this hourly fair value gap. Maybe it can come to the 15-minute fair value gap low. I will accept that. To the constant encroachment of the week from 4-hour chart, I will accept that. I will accept every single thing. But if it is broken, I'm not looking for sell. If you ask me, I don't want to see that. What I would love to see, I would love to see lower run. Higher run should be stopped somewhere here. If it failed to go over there, I'll be more happy. I'll be more happy if it failed to go over there. Instead of that, if it can come some kind of fair value gap over here, then if it started to go lower, I would love to see that type of run from 15-minute chart. Guys, that's all for the Euro USD. If anybody has any confusion, you can ask me now. Otherwise, I will go to Nasdaq. But you have to tell me that this thing is clear to all of you. Do you use Scott data? What is Scott data, brother? COT data. What is that, brother? Please let me know that everything is clear to Euro USD. Then I will go to Nasdaq. It's gonna be end very soon, so I'm just going to waste some little more time of yours valuable time. I'm sorry, but I'm gonna finish my streaming very soon. Okay, you have to reply me first that you got every single thing clearly over there. to understand how to read or how to do that. Okay, commitment of traders. Oh, sorry, quad data. No, brother, I don't know how to use them. I tried to learn them, but I failed. Okay, quad data, I failed to learn that. Why I told this as my inversion parabolic? Look, price went lower, it went higher. Okay, this all level. Okay, this parabolic gap, this parabolic gap, this parabolic gap, all of this parabolic gap. Okay, in my opinion, this is the important parabolic gap, and this high failed to take a swing high. This swing high or any type of swing high, this swing high has failed. So when this area has happened over here, that parabolic gap, specifically this parabolic gap, get very much importance for me. This is my inversion parabolic gap. That means if price can come over here, there is 99% of the chance price will expand lower. 99% of the chance price will expand lower. That is my inversion parabolic gap. I talked about inversion parabolic gap before already. So I think I should make a video about the inversion parabolic gap and start a new troll. Hey sis, how are you? What are you doing? You are just singing. Sorry, not singing. You are just playing this music over there, and it was disturbing me. Okay, I'm just coming. Don't worry. I'm just coming. Wait for me, sis. There's my sister. She's here, but she doesn't understand anything, nothing about this trading. Sometimes she comes to me and asks me, brother, what are you doing? This is useless. Why you don't trade for yourself? And finally, she come and I mean, at the end of the conversation, she told me she always used to tell me, oh man, that is good, that is good. You have a big heart, whatever. Sorry, you're not from here. I from here. Okay. I told you that I would love to show you the order block, profit order block. So that was from yesterday, actually. I mean, Friday. Uh, she's right. Whatever, brother. When price went higher to this parallel gap, I got this order block. Though you can mark this parallel gap, the last parallel gap from the 1 minute chart. It's correct. Obviously, it's correct. But I got this order block. This is the time when I saw this perfect order block. Okay, because in forex, I really don't get perfection now these days after 2020. So I don't get the precision from the forex, but that time I got this precise price action. So price came to that order block perfectly. It come over here, then it went below the, I mean, the fair value gap. It went higher. That was a perfect setup. If only if I saw a fair value gap over there, I would tell you that brother, you should take that entry. But there was no fair value gap from 1 minute chart, so you have to wait for another market structure shift. When you will get this market structure shift, there is our well-known setup. If you are actually mm, if you know this setup, that is the first second level gap and this is the breakaway gap. Okay, so your entry has to be here to this level gap and your stop loss has to cover the breakaway gap, and your target should be here somewhere. I mean, the first fair value gap from this setup. Okay, this low, so two fair value gap. This is the first fair value gap. That should be your target. Okay, I don't know how many pips will be there, how many handle, or I mean, sorry, the pips is there. I really don't know, but that should be the entry. But if you would see a fair value gap over here, that would be the best entry. The perfect entry in forex now these days, I don't see this type of perfection, but that was the perfect entry if there was any fair value gap. But there was no fair value gap. This is also valid entry, and this is what it is. Okay, that is why I marked that order block to show it to you, because it came to the consequent encroachment perfectly from the 15-minute chart. It came to the last parallel gap. It came to the water block, every single thing, then broke lower. Was a very nice market structure shift over there. The only thing was missing is the fair value gap over here. If there was a fair value gap, and if you would take that entry, oh man, that is hilarious, to be honest. So that is why I have marked that. I guess you guys got the price action from the Euro USD. I hope you will say me that you understand the way you should read the price. It came to this order block, but I would love to see it will go through this order block and the mean threshold. Finally, it will go toward that sell side liquidity. But if this order block can hold the price, it should go above that high first, then that high. That should be the target. So I don't want to see that. Okay, I really don't want to see that. Now, here is the time for the Nasdaq. I'm going to first with the Nasdaq, and then I will talk about something for 5 to 10 minutes. Then I will stop talking. I'm going to read one. And the market strategy. I don't know what is that, but I'm just going to hide them. So over here, this is the weekly chart, and you can see after taking the sell side liquidity, market structure shift. This is the first fair value gap. That should be the breakaway gap. This is the second fair value gap. Price should come to this fair value gap, and then finally we have very nice buy side liquidity over there. It should come at least to this fair value gap. If it is extreme, then it can come to the breakaway gap. Consequent encroachment shouldn't be broken by body. Then it should expand higher and it should take the buy side liquidity. So that is for a long term weekly bias. Right now I'm thinking about this fair value gap. Price should come to this fair value gap. You can say, brother, price come to this fair value gap one time. See, it come to this fair value gap. In my opinion, this fair value gap is not a fair value gap. It is a gap. Okay, this is not fair value gap. This is just a gap. Some of you will tell me this is the breaker, low, high, lower, low. Price went through this breaker, the price come back again to this breaker, and then it went higher. I am agree with you. That is a perfect breaker. In in rules, that is perfect breaker. From monthly chart, I'm expecting lower run for the Nasdaq. So right now I'm thinking about prices coming toward that weekly fair value gap. So this fair value gap is from weekly chart. Don't get confused, brother. This is from weekly chart. Oh, do I want to see higher run? No, I don't want to see higher run, but it can go little above first, then it can expand lower. Okay, it can happen. If you say the premium and discount array, brother, you told us that you don't trade toward, using the premium and discount, but see, you are at the deep premium. Now you are talking about the sell, and when it will be at the discount, you are talking about to buy. I'm not telling that premium and discount doesn't work. I didn't tell ever that. What I told you, I don't see the market depending on premium and discount. What I see is the setup. It has taken the liquidity, market structure shift, price went higher. This is the first fair value gap. This is the second fair value gap. Where did it come to the last fair value gap? This is the last fair value gap. Last fair value gap hold the price. Okay, it didn't fail to hold the price. If it would fail the price, if price can close above this fair value gap, I would love to buy here. So what is that level? Is that discount or premium? In my opinion, that is the highest premium at the last of the premium. I would love to take my buy over there with confidence that market is going to take that buy side liquidity. With confidence, I am going to take my buy over there. As it has hold the price and market is going lower, I am thinking market is coming toward this fair value gap. So I am going to take. I'm planning my short entry over there. Okay, the reason is price is coming to that fair value gap. When it will come over here to this fair value gap, I will start to read the price. Then that is price going to go higher, or it is going through those fair value gaps, and it is going to target that low. Okay. Now, if price can go through the last parallel gap, if it can go through that, I would love to take sell over there, and that low will be my target. What is that level? That is the deep, and deep discount level. At the deep discount level, I'm going to sell. Maybe this is the, some of you actually use the optimal trade entry something. I don't, I don't see market like that way. I read the price depending on the fair value gap, because fair value gap is the heart of this concept. ICT talked about premium and discount, right? ICT always talk about premium and discount. Now you are selling. If you ask me, brother, you are selling over there. ICT even use the premium discount. In my opinion, 90% of the ICT student, they read the premium and discount in a wrong way. I saw so many new traders, new, I mean, new YouTubers as well. I mean, if you ask me the name, so far I remember his name is Sharon or something. I mean, he has experience near about 8 months of ICT. So he used I mean, the premium and discount, and it is just kind of, you will laugh at him. Okay, so in my opinion, most of the traders use that premium and discount in a wrong way. They force the market for making the setup. Whenever they get a sell entry, they mark the premium level, and whenever they get I mean, if you see, market went through this parallel gap, right? It went through this parallel gap. I told you that I'm going to sell over there. I'm going to sell over there. Now, what you will do, you will mark from here to here, and you will tell me, see, brother, it is still premium. You are still in premium, so you are selling from premium. Now, I'm just, I'm not discouraging you. I'm telling you the fact. We don't know. Trust me, brother, we don't know. We don't have any idea what we are talking about. We have no idea. Now, if price can come here, okay, to this fair value gap, then it started to go higher and take that buy side. It will look like that way. It come here, then it come here and take that buy side liquidity. What will you say? You know what will you say? You will tell me, see, brother, it this is our range, dealing range, and price came to the discount. It go above and it has taken that buy side liquidity. How beautifully it has come to the discount and went higher. Now, when you are going to mark that leg, why you are not going to mark that leg? What's wrong with that leg? What's wrong with that leg? Still you are in the premium. See, this is the 50% of this dealing range. Then why you are not going to take buy over there? Now, what is the most, I mean, highest dealing range over here? This is the highest dealing range. Price is inside that range. Here you are at the discount. I mean, sorry, premium. This is your discount, right? When this high will be broken, you will change our dealing range. Until price is inside that dealing range, you have to mark that high and that low as your dealing range, as your premium and discount. This is your discount, this is your premium. Yeah, price came at the equilibrium. You can say this buy is valid depending on PDRA, premium and discount area. I'm agree with you. You're right. But if price can come over here and buy over there, that is not a discount level. That is the premium level. Then why you are going to mark? I mean, take your buy over there. You are not allowed to take your buy over there. No, brother. It is this dealing range. So when I should mark this dealing range, when I should mark that dealing range, when, brother? Tell me. I'm not telling you that premium and discount doesn't work. What I'm telling you, we don't know how to mark the dealing range. When we should mark which dealing range. How will observe the dealing range. When this thing will work, I will mark this dealing range and I will tell you, see, price come to the discount, maybe some kind of optimal trade entry. I mean, the 0.618 or 786. I mean, the exact level. What is the exact level? The 0.618, not 62. It's 618. Okay, then 786, not 79. It's 786. And the another level was I forgot already. I forgot, but those two levels I still remember. It's not 7 9. Yeah, in practical 786 is equal 7 9, but the exact level is 786. The exact level is 618, not 62. 618. That is actually, I'm not a great fan of optimal trade entry, but I'm telling you that when it will come over here, you are going to show me this dealing range. No man, it's wrong. You are just doing it wrong way. That's why I don't use the PDRA, premium and discount area, because I don't know. I admit that I don't know where which dealing range I should mark. I don't know. What I don't know, I can't just tell you when it works here as a buy, I'm going to mark that dealing range. When I'm going to sell over here, I'm going to mark that dealing range or that dealing range that it is at the deep premium. I'm not going to do that. This is misconcept, and that is the thing I hate. So that guy, I'm sorry if Sharon, I used his name, but to be honest, uh, I mean, he's obviously a good guy, and he knows. I think he knows better than me. He's not wrong. Okay, I'm wrong here. So I don't mean, I didn't want to mean his name. But whatever. Please, I'm sorry for that. Okay, but whatever. This is the reason I don't use the PDRA or the premium discount array, because I don't know how to use. I'm I'm the loser here. Okay. So what I actually use, I use the fair value gap. This is the last fair value gap from the. It is very clear for me. Nobody can argue with that. To that big run, I mean, from here to here, this is the last fair value gap. Nobody can argue. There is no other fair value gap above that high. I mean, above that fair value gap. So I'm going to use that fair value gap as my direction. To this range, when price will go below that low, I will start to look for another fair value gap to another dealing range. If at finally I have the last fair value gap over here from the weekly chart, until this low is not broken, this is my dealing range. I'm going to mark my last fair value gap here. This is my last fair value gap. Till now I'm expecting price will come to the upper fair value gap because of the setup. Okay, if it can come over here, then I will expect some kind of higher run, but I will observe the price if it would love to go higher or if it would love to go lower. Okay, there is swing high to swing low. Yeah, brother, I told that swing high to swing low. So there is this swing high and this swing low, and I mean PDRA is always the dealing range. Okay, not swing high to swing low. Let me show it to you. Exact PDRA is over here to here. This is your dealing range, because all of this price action is inside that dealing range. Okay, failure swing take the loss. Can you explain that, brother, little bit? Or did you mean by that failure swing take the loss? So this is actually your dealing range from here to here. This is your discount. I mean premium. This is your discount. I don't know what from where what you have learned, but this is the main dealing range for marking your premium and discount from the weekly chart. I don't care about anything else, whatever you say me, whatever other people say me, or whatever. Okay, this is your premium and discount range. This is the dealing range. Now, when price is inside this dealing range, there is another swing high or swing low. Okay, now I'm going to mark that swing high and swing low. So this is the swing low, lowest low. This is the lowest high. I mean, sorry, highest high. I'm going to remove that one, because this all of this price action is inside that dealing range now. It is inside that dealing range right now. When price come here to here, okay, it come here to here. This dealing range I don't need, because price is already outside of that dealing range. This low to that high. See, price is already above that high. So I am not willing to mark that dealing range. Where is price right now? Right now price is over here. So I am going to mark, finally I am going to mark that dealing range. This is my right now, the dealing range is over here. Why? Price is just inside that run, that leg. So price is, when price is inside that leg, this is my weekly dealing range. The thing is, I try to tell you, you will see whoever talk about the PDRA, what they will do. they will tell you if this thing happened, okay, if price can come over here, then it go and take that buy sell liquidity. They will tell you the prices inside that, what to say, the discount area, and then it went higher. They will tell you this. Now if it doesn't happen like that way, instead of that, if it went through this, all of this fair value gap, okay, all of this fair value gap it went through, then it make some kind of fair value gap over here, then it went lower, maybe it has taken some kind of sell liquidity. What they will tell you, they will start to tell you this was my dealing dance, this was my dealing dance, so that is deep premium. I took my sell at the deep premium, and then it came here. Okay, I am just trying to tell you this. I'm not trying to tell you which delineance you will work with. This is kind of thing, that is the reason I told you nobody, I mean most of the people, they don't know how to use the delineance. I don't know how to use the delineance. That's why I don't talk about the PDR, premium and discount array. If you ask me, I can talk about them. I can show off. I can tell you that this is the deep premium, so I'm going to take my sell over there. But that will make you to believe that premium and discount is too easy to mark, too easy to trade. Nothing is easy over here, brother. Million billion of the dollars is over here. If that was very easy, every single ICT student would be already profitable. Every single ICT student would be profitable by using some kind of dealing range or PDRA, premium sell, discount buy, or internal liquidity taken, then external liquidity is target, everything like that way. Okay, if that was very much easy, then every single one will be the winner already. I don't know you got my point or not. I'm just telling you it's hard. It doesn't work. I'm not telling that. I'm telling it is hard to understand. It is not that much easy. So I don't go for the hardest thing, I go for the easiest thing. For me, to mark the last fair value gap is thousand times easier. It is much more easier for me to find out which delineance will work. See, this is the last fair value gap. I'm working with that fair value gap. If price can come over here to that last fair value gap, I will work with that fair value gap. If it can hold the price, I will think market is going higher and it will take the buy side liquidity. If it failed to hold the price, this low will be obvious. Simple. Period is when the move starts from, hence you use swing high and swing low. Maybe, brother, I have no idea. I told you, brother, I don't know how to use the dealing rails or the PDRA, premium discount area. Okay, maybe I'm wrong. Whatever. Just let it go. Okay. So right now I'm expecting price will come over here. Not about I mean not any other concept over here is working. The only concept is working over here is the last weekly fair value gap, that I can see it has hold the price and send it back toward that fair value gap. Domino, how are you, brother? It's been long, I didn't see your name. How are you? Let me know, brother. And share and like. Yeah, you can give me a like or dislike, whatever you want. You can give it to me, but don't skip that part. Okay, give me some kind of like or dislike, whatever you want. It's up to you. I'm expecting prices coming toward that fair value gap. There is nothing else except my expectation. The only thing I got here is the last fair value gap has hold the price. Nothing else. Okay. It is now trading this fair value gap, this weekly fair value gap. Let me actually mark it. The weekly fair value gap. So this is the weekly fair value gap. It has closed below the consequent encroachment. That is kind of sign that market would love to go lower. I'm not sure. I would love to see a body close below this weekly fair value gap. If I see that, that will make me more confident that market is coming toward to this fair value gap. Okay, that's all from weekly chart. Let's go to the daily chart. So from daily chart, I would love to remove this weekly fair value gap. If you would love to use them, use it to your chart, you can. But I don't want to make my chart more, you know, with more levels. So you can see this daily fair value gap. I marked it so long ago. After taking the sell side liquidity, market structure shift, there is the fair value gap over here. First fair value gap, this is the last fair value gap or the breakaway gap. Body shouldn't close below the constant encroachment. As I'm expecting market will come here, that's why I marked the breakaway gap over there, because daily time frame is lower than weekly time frame. So from weekly chart, I'm expecting price will come here. From daily chart, price has to come to the breakaway gap. If my expectation should work, then it has to come over here. Now it came to the last fair value gap. I can expect some kind of higher run, because I would love to get the rejection. Okay, I mean the rejection or the reaction from the fair value gap. So I would love to get that. Here it came to the daily fair value gap. It started to go higher. I'm fine with that. Now I have two fair value gap over here. The same thing, brother. Just taken the buy side liquidity. Market structure shift. No, brother. This is not market structure shift. It didn't trade any fair value gap over here. It doesn't have any swing high. Sorry, swing low on its both sides. I don't care, brother. This is from daily chart. I don't need perfect thing from the daily chart, because I'm not going to trade over here. From here, I'm just forcing market to show me something. Okay, just I need the direction from the daily chart. I am not going to do anything from here. I am using 15-minute chart. From 15-minute chart, I need the perfect market structure shift. Above 15-minute chart, I am not going to show, I mean see every rules working over there. Nothing, brother. So this is the market structure shift. First fair value gap or the breakaway gap. There's a very small fair value gap over here. Price can come to this fair value gap, then it can go through this daily, I mean the daily fair value gap. That means I'm expecting some kind of higher run first, then the lower run. It is confusing, right? It is not confusing at all. If this fair value gap failed to hold the price, this is the last fair value gap from daily chart. Until it is holding the price, I'm bullish. If I see this daily fair value gap failed to hold the price, this low is my target. Below this low, there is my weekly chart, I mean weekly fair value gap. Price will reach over there. Until it is not broken, I'm thinking either price will be consolidated, or it will go above, little bit above either this fair value gap or that fair value gap. Any of those fair value gap. I'm not thinking price is going higher and taking that buy side liquidity. When I will think that if this weekly fair value gap failed to hold the price, then I will think market is going toward that buy side liquidity. Why? Remember the dollar index? What I told you from there? Every single thing I'm thinking over here, comparing with the dollar index. From dollar index, I'm expecting higher run. That should, I mean, that should make Nasdaq to give me the lower run. If I see any kind of lower run for dollar index, I will expect higher run for Nasdaq. See, you have two chances. You will observe the dollar index, you will observe this market. If you see it is going higher, dollar is also going lower, it will help you to determine that market is going higher. Now you have some specific level. If it can go through them at the same time, if dollar index can go through some specific level, same way, you are good to go. Let me actually see what it well said. Thank you, Samju. But there is one fair value gap above and one below this market fair value gap. Why you only this fair value gap? Here is when the most, but one in- there is one fair value below at 30 October. Why is this not the last? Let me check it. Okay, but Sanjay, I'm just coming to you before the. I mean, let me see. What did you say? 30 October. Remy, there is one fair value below at 30 October. Why is not the last one? So, Remy, you are talking about this one. I think you are talking about this one. Yeah, obviously, what I told. This is the last fair value gap. This is the breakaway gap. Okay, this is the breakaway gap. Why I have marked that gap? After taking the sell side liquidity, market structure shift. This is the first fair value gap. So that should be the breakaway gap. This is the upper fair value gap. What I told you about our well-known setup. Your, I mean, that should be your setup, right? That means price should come to this fair value gap first. If it is extreme, then it can come to the breakaway gap. Now, if market would love to go lower, it will break the breakaway gap. It will go through this last fair value gap. That is for too long. We don't need to mark the breakaway gap right now. That is why I didn't mark that one. Right now, I'm thinking price will come at least to this upper fair value gap. Okay, brother? That is the reason I marked that one. But I'm not telling this is the last fair value gap. This is the upper fair value gap. Remember our well-known setup. Taking sell side liquidity, market structure shift, breakaway gap, upper fair value gap. Price should come to the upper fair value gap. It should expand higher. If it is extreme, then it can come to the constant encroachment of the breakaway gap or the last fair value gap. I think you got the point, brother. Already I thought you see. Okay. Thank you, Remy. But there is one fair value gap above and one below this marked fair value gap. Why you used only this fair value gap? Sanju, can you tell me from which time frame and where you asked the question? Because I think I already lost the point or oh okay. I got it. I think you are talking about here. I mean here maybe. You are talking about this fair value gap. Oh no, not this one. I mean oh, not that one. I think you are talking about here. I mean you are telling me there is fair value gap over here. There is a fair value gap over here, and there is a fair value gap over here. Thanks for asking me this question. Thank you very much, brother. I really love whenever you ask me the question. Now, I would love to mark the buy side liquidity first. Okay. It has taken the buy side liquidity. So this is the buy side liquidity level. Now, this fair value gap is at the level of the buy side liquidity. Okay. This is at the level of the buy side liquidity. When I see a fair value gap which is situated at the level of the buy side liquidity, I just don't mark it as a fair value gap, or that fair value gap is not important for me at all. If the fair value gap is above the buy side liquidity level, okay, somewhere here, that is not important for me. If this fair value gap is at the level of the buy side liquidity, that is not important for me. It has to below the buy side liquidity level, then it is important for me. Okay, that is the reason I am going to remove that fair value gap from my chart. So one fair value gap, I think you got the clear idea. And if you ask me from where I get this concept, I get this through my observation. Okay, uh, so I can't give you the proof that ICT talked about this over there, because I never saw him to talk about this. But I saw most of the time, not 100% of the time, but 95% of the time, that fair value gap is valueless. That is why I removed them from my chart. Now there is two fair value gap. After shifting market structure, this is my first fair value gap. Price should come to this fair value gap, then it should go lower, because this should work as a breakaway gap. If price is overzealous, it can come over here to the constant encroachment. Nobody can close above the constant encroachment. If I see a body close above the constant encroachment, that tell me already market doesn't want to go lower. Instead of that, it would love to go higher. If I see body close, except the fake breakout, okay, except the fake breakout, if I see a body close above the constant encroachment, there is 90% of the chance market is going above. The last fair value gap is going to fail to hold the price. Now over here, look, this is from the daily chart. Let me go to the weekly chart one more time. See, body didn't close above the constant encroachment of the last fair value gap. That is why I'm thinking market is going lower. From daily chart, if you see, I talked about the fake breakout. This is the fake breakout. Okay, one candle close above the constant encroachment, the very next candle close below the constant encroachment. I think got it. I've seen your videos where you explain the BMS break of market structure, something like this. Okay, but I have seen that sometimes you use the BMS in a different way. Can you explain it a little bit? No, no. Weekly, you just answered the below fair value gap. Yes. Uh, so if it is already answered, Sanju, then that's cool. If it is not, then just tell me. I will go back to my weekly chart one more time. Okay. And Kelly, you have told me that I explained the BMS means break of market structure, something like this. No, brother, I don't go. I mean, I don't break my rules. Okay. If you mark this one as your swing low for shifting market structure, I told you you don't need precision over here because this is the daily chart. I am just using this chart to find out my bias, where price would love to go. That is the reason I am just forcing markets for some kind of setup. The reason is I'm not going to take my entry over here from where I need the precision or the perfect market structure sheet. I need it from 15-minute chart. I need that from 15-minute chart. You will never see to mark a swing high or swing low that didn't require, I mean, that didn't fill the requirement from 15-minute chart or 1-minute chart. Above 15-minute chart, I don't need the precision. Why? The reason is from here I need the bias. Okay, for longer time. This is for longer time bias. You can't determine your bias from a daily chart and then you will go to 1-minute chart and you will take your entry depending on your daily bias. You can't do that. You have to go to 15-minute chart. You have to find out the bias from 15-minute chart. Then you can go to 1-minute chart and you can take your entry. So you need the precision or precise price action from those time frame. Above those time frame, you need the bias. You don't need the precision over here. Okay, brother? The BMS in 1 minute you were looking for swing higher swing low from in fair value. That's correct, brother. That's correct. So fair value, which one is best? Fair value cap is the best, brother. Fair value cap is everything. If you can understand the fair value gap, you need nothing. Nothing at all. No breaker, no order block, no rejection block, nothing at all. Just fair value gap is enough for ICT concept. So whatever I was talking, I was telling you that from the daily chart, if price can go to this fair value gap, that is perfect. When it will be here, I will try to, I will start to think market is going lower. Whatever, until this high, I mean this fair value gap is not broken or this last fair value gap is not broken from daily chart, I am expecting lower run. I'm expecting price will go low and it will take, I mean it will take this sell side liquidity and it will reach over here to this weekly fair value gap. Okay, until this fair value gap is not broken, I am thinking this. When it will be broken, I will observe this weekly fair value gap. If this weekly fair value gap fail to hold the price, this buy side liquidity will be my target. When this will be broken, this last fair value gap will be broken, I will be in confusion. Does it would love to go higher or does it would love to go lower? Okay, I'm not sure market is going higher, I'm not sure market is going lower. When this one will be broken, when this weekly fair value gap will be broken, this one will be broken, I will be 99% sure that market is going toward that buy side liquidity. I think you got my point. When this daily fair value gap is broken, the lower on it is broken, body close below this daily fair value gap, this is most obvious liquidity, finally it will come to this fair value gap. When you don't have two fair value gap in a row, what would be the other rules you use to look for the trade, or you just don't trade? Oh man, the two fair value gap is kind of the well-known setup to me. I just call them well-known setup, so that is more confirmed that it is going to work. Okay, but if I don't see two fair value gap, the one fair value gap only, that is perfect to take your entry, man. It's perfectly, I mean, you can easily take that entry. You don't have to worry about anything. Just think there is no fair value gap. Okay, just one fair value gap. So what you have to do, you have to take your entry over here, and you have to put your stop loss above that swing high. If you have very clean buy sell side liquidity, you will target over there. Okay, this should be your entry over here if you have only one fair value gap. Now if you have two fair value gap, why it is well known to me, or why I love this one? The reason is, just let me, you have two fair value gap. Okay, now I'm going for the PDR one more time. This is above 50%, right? This is above 50%. This fair value gap is above the discount, or this is the premium area. So maybe you are very good at premium and discount, so you will wait until price will reach to this fair value gap. When it will be here, then you will take your entry. I'm not like you. What I do, I actually take my entry to this lower fair value gap, because sometimes I miss the entry. If you call it FOMO, FOMO, I'm not agree with you, because I saw many times that price come to the first fair value gap, it never reached to the this fair value gap. Okay, it never it went over there. Then it expand lower, and I'm going to put my stop loss. If this breakaway gap is bigger, then I'm going to put my stop loss above the constant encroachment of the breakaway gap, or the upper fair value gap, or the last fair value gap. Okay, because price can go little bit above the constant encroachment. If it is very small, then it can go above the constant encroachment, then it will expand lower. If this breakaway gap is much more smaller, then I love to put my stop loss above that breakaway gap. So that is why I told it well known setup, and I really love this setup. So I hope your clear doubt is clear, brother. Yes, partially for the weekly breakaway fair value gap, ABD, the fair value gap above weekly fair value gap is marked. I'm not clear why that weekly fair value gap is not marked. Best sell side if I take entry on fair value gap. Best stop loss if I take entry on fair value gap. I told you the best stop loss or something. The best is the above the swing high. Okay. And Sanjay, I'm going to weekly chart one more time. What did you say? Why I have marked this one, right? I think you are talking about this three fair value gap now. There is one and one. Sanjay, if I am right, please write it down that I'm right. That I'm talking about the right thing you are asking. Okay? You asked me why I have marked this fair value gap, and partially why I didn't mark this one. Why I didn't mark this one, I already explained. Okay, so why I didn't mark that one? This is your question. The thing is, this is not a fair value gap. This is just a gap. Now, if you ask me what is fair value gap, what is the difference between fair value gap and the uh, just gap, uh, that is a long discussion. Okay, this gap has no value according to my rules, or according to my observation. This has no value. This is kind of the measurement gap. It is called the measurement gap. How it is called the measurement gap? From this low, that high. This is the 50%. Though it is not perfectly at the 50%, but it is very near to the 50%. Okay. This is below the 50%. I'm not going to mark that on. That is different way I'm going to use that. I have already explained after market structure shift. This is the first fair value gap. This is the second fair value gap. Both of those fair value gap are so important for me, but this one is the measuring gap, or that is actually placed at the 50% of the level. In my opinion, this fair value gap has no value. I am not going to use this fair value gap for later use. This is not important at all for me. If there is another fair value gap above that fair value gap, that is also not important for me. How many fair value gap can have, I mean, build over here? Like find it if I can get some. Mm, if I can show it, I mean, find some. Okay, like, like, oh man, here one. I have no idea, brother. How can I show it to you? But uh, here I can see two fair value gaps. See, one, two. This two fair value gap is important for me. So this is my breakaway gap. Body can't close below the constant encroachment. I would love to take my entry to the first fair value gap. This fair value gap, my stop loss will be below this constant encroachment of the breakaway gap. So this two fair value gap is important for me. If there is another fair value gap above that fair value gap, that is not a fair value gap according to me. Like, look like that fair value gap. Okay, this is the fair value gap. There is another fair value gap above that fair value gap. Look at this fair value gap. No, this is not perfect, but just for example, this is a fair value gap. This is not important, but you can say, brother, see, price came here perfectly. It has traded that fair value. No, it didn't trade that fair value gap. It has traded that order block. This is the order block. This time price trade that order block. Okay, so this is another topics. I i don't think so this is the perfect place for talking about this, but I would love to show it to you, why this is order block and how I am going to mark that order block. I am just showing it to you. Okay, not, you are not going to judge me, please don't judge me. Here, look over here. This is the order block. This is the min threshold of the order block. Okay, 50% of the order block. So price come to this order block, it went higher. Later it retested the order block one more time. This is the order block level. Look at those bodies. Finally it went through this order block, but body didn't close below the mean threshold or the 50% of the order block. So it came to the mean threshold, then it went higher. It go above the order block one more time. See this week, look at that week, it came order block one more time, went higher. Okay, so this fair value gap is important for me, that fair value gap is important for me. In my opinion, this is not even a fair value gap, that is just a gap which is actually not valuable for me. Not not there is no value for me. This fair value gap has no value for me. Okay, so I don't know you got your answer or not, but in my opinion, this two fair value gap is important for me. So same here in weekly chart. Just a second, let me actually go over there. So from the weekly chart, as I have one, two, three fair value gap. Is there any other fair value gap? No, there is no other fair value gap. So there's three fair value gap. But you say, brother, it came to the consequent encroachment of this fair value gap. See, it even didn't reach to this fair value gap. So this is very important for you. No, bro. This is just random reaction. But if I would love to mark mark other things, you will see it what it has done over there. Okay, but I don't want to talk about those. And low high lower low, this is the breaker. It just came to the breaker level, then it went higher. Okay, no, that fair value gap, it just came to the breaker level. Okay, so that is for your understanding. I if you understand or not, whatever, just let it go. Whatever, in my opinion, this fair value gap has no value. I didn't mark this fair value gap because that is breakaway gap, that is for longer term. Right now this fair value gap is my target, it should come over here. Okay, so that is, in total, that is the thing. Do you have a video where you explain the order block? No, brother Kelly, no. I don't talk about order block, only the order block. I don't talk about that. Okay, except order block, you can ask me anything. If I know that, I will answer that. If I don't know, I will tell you that I don't know. But order block, I don't want to talk. Okay, just let me go with, I mean, let it go, the order block. Please, that's the request, brother. So basically use only first and second fair value gap, UVD trade from the second fair value gap. Yeah, that's the thing, brother. That's the way I do. Sanju, are you new here? I mean, brother, if you're new, just stay some days and please try to go to my Twitter, okay? Because I do most of my teaching. If you said this is teaching, I will say like that way. I do that to my Twitter, okay? Every level, every single thing, every time I tweet. I tweet a lot. So if you are over here to my Twitter, I think that will be easier for you because in YouTube I'm not regular, but in Twitter I'm always regular. Okay, so you can search over there in my Twitter at the rate of nrt12345. You can find me by that thing I guess, or you will get the link to my YouTube channel to the description. You will get that link, or from my channel you will get it. Okay, so please stay over there. I hope, I mean, first parabolic is the breakaway. Yeah, first parabolic is the breakaway gap. After taking the market, I mean, taking the buy side liquidity, market structure shift, the first parabolic gap is the breakaway gap. After taking the sell side liquidity, market structure shift, the first parabolic gap is the breakaway gap. The second parabolic gap should be the entry point. I parabolic gap can be used for bias. Uh, for bias, you can use the parabolic gap. I mean, the I parabolic gap if it is more obvious then. I mean, if it is more obvious, then you can use that for your bias. Otherwise, like, look over here, okay? From the daily parallel gap, I'm thinking price will come here. Okay, for example, it is coming here, then it will expand lower. So this is the weekly chart. I mean the daily chart. So this will be my daily bias, right? I didn't target any liquidity. Some people will tell you that market will go towards the liquidity only. Market always go toward the liquidity. Either it will go for the liquidity or it will go toward an imbalance. So there's two different thing, okay? Market always go for liquidity or balancing the imbalance. So you can mark the inversion parabolic gap as your bias as well, brother. Just create breakaway. Uh, just create breakaway gap. Man, can you please explain what is seized? Is a CISD? What is that? I forget it. Okay, I heard that word, but I forget it. I think something like internal liquidity or something. Can you explain what is seized? Breakaway gap is after the perfect setup, okay? When market has taken the sell side liquidity, market structure shift, the first fair value gap is the breakaway gap. It has taken the buy side liquidity, market structure shift, the first fair value gap is the breakaway gap. Very simple, brother. I mean, it is not confusing. It's very simple and whatever. So right now I'm thinking some kind of higher run. It can come to this fair value gap, then it can, I mean, it can expand lower. I will I'm expecting lower run, okay? I'm expecting lower run, but first I would love to see if this parallel cap can hold the price. If price come over here, though I do not see it will come over there, but if it can come over here, I will see if it can hold the price or not. I'm going to on our chart, change in state of delivery. Sys can use an MSS. Okay, how many configurations do you have to enter the market? It's a difficult question, brother. I can enter. I mean, how to answer that question. I'll have to take my entry depending on the breaker. That is my first priority. I can take my entry depending on the breakaway gap. This setup, let me actually mark the setup. I can take my entry depending on that. This thing, I can take my entry over here by entry. I can take my entry when price will come here, the last fair value gap, and it will hold the price. It will take the sell side liquidity, I mean buy side liquidity, market structure shift, fair value gap. Here, the same fair value gap I can use these two setup for taking my entry. I can take my entry depending on the inversion fair value gap. I can take my entry depending on the order block. I did this in front of the people over here to my life before. And then what I can do? I don't know how to take the turtle soup entry. That means, the what is turtle soup entry. I don't know really. I have no experience. I have no idea how people take that entry. I don't know. Okay, so turtle soup entry, I don't know. Then the well-known setup. I mean the first fair value gap, last fair value gap. I can take my entry depending on that fair value gap. I don't know how many way I can take. But I explain the things, okay, beforehand. So if you are with me in Twitter, you will understand. You will get the point, brother. I have a clear pass. How many okay, so since statuses can use the yeah. Balloony, you are right, brother. Then state of delivery CISD, okay. Can use as MSS. It can use as MSS, brother. I mean after MSS it will be CISD. More confirmations need when you don't have a clear bias. You know the weekly and monthly daily bias. Why I need why I need that? I need the higher time frame bias because of my narrative. What does that mean? What do I mean by that? You have to watch the video. I'm not advertising my things. I'm showing it to you so that you will be helpful. Okay, there is 5 video, 5 days narratives. There are different type of narratives, but I explained the easiest one. Okay, over there, the easiest narrative. Please go to that narrative from playlist narrative video. Please watch those narrative videos, 5 days narratives. I need this higher time frame analysis because of my narrative. Depending on my narrative, I can take so many entries without even analyzing the chart. Okay, that is why I need the higher time frame analysis. For taking entry, I just need 50 minutes and 1 minute. I don't need any single time frame, any other time frame. Just give me 15 minutes and 1 minute. I can take my entry, and 90% of the time I will be correct. I'm not showing you off you. Go to my I mean the Twitter. You will see that. Okay, see my previous tweet or the I mean how to say long time ago. I whatever I have tweeted. Watch over there. You will get that. Okay, I'm not showing you off. I can just take my entry to my 1 minute chart, analyzing the 50-minute time frame, and I will be 90% of the time I'll be right. I will be right. Okay, every single time, every single time. It is forbidden to tell that I will be right 100% of the time. Otherwise, I would tell that. But it is what it is. But you will get everything if you are with me in my Twitter. You will understand everything. So whatever. This is the hourly chart, and from the hourly chart you can see, I mean I don't need to waste my time over here. From the hourly chart I would love to go to 15-minute chart, because from 15-minute chart I will get more precise price action. So from 15-minute chart, that all the setup from yesterday, every single thing I have marked so far, I mean, so long ago before it happened even. Okay, there was some buy side liquidity level here. I have already uploaded a video today or yesterday. You can watch that video. I have already explained the setup or the entries, and I have tweeted all of this beforehand. Finally I have this buy side liquidity, this high, that high, and this high has made that buy side liquidity more stronger. Okay, price came to the last fair value gap. There is two fair value gaps. So I am going to mark those one more time, what I was talking about over here. This is the first fair value gap. This is the last fair value gap. This is the breakaway gap. So price came here to the first fair value gap. You are allowed to take your entry to the 1 minute chart. If you get a nice setup over there, you are allowed to take your entry over there. Okay. Where should be your target? To this buy side liquidity. Are you going to hold your trade until there? No, you're not going to hold it until there. You have to find out some 1 minute liquidity, and you will close your chart over there. Price went above. It came back again. Where did it came? To the breakaway gap. This is the last fair value gap from the 15-minute chart. Is there anybody that has closed below the constant encroachment? No, there is nobody that has closed below the constant encroachment. So it is perfectly okay. That means the last fair value gap hold the price. If you go to 1 minute chart, if you go to your 1 minute chart, you can see this was the market structure shift. Now this high is perfectly valid for shifting market structure because it has traded this fair value gap, or it has a swing high on its left, it has so many swing high on its right, all of them are below that swing high. There is no other swing high that is valid for shifting market structure, no other, not even this one. In my opinion, there is no other swing high that is valid for shifting my market structure. This is the only swing high that is valid for shifting market structure. After shifting the market structure, this is your first fair value gap, this is your last fair value gap. Okay, so this this is your breakaway gap, this is your first fair value gap. You have to take your entry to this fair value gap. Your stop loss will cover the breakaway gap. Where will be target? That high and that high, they are relatively equal highs. That should be your target. You are not going to hold your trade until here or the extreme buy sell liquidity. No, you are not going to do that. You are going for some kind of obvious liquidity. So that should be your trade, and it was perfectly worked. I marked it beforehand. I told it beforehand to my Twitter. Please watch over there. Okay. So right now I'm thinking about the price action over here. That price can go to the 50 minute. I mean from here, look over there. That buy sell liquid. Okay, that high, and that high. All of those highs are more obvious. So price can go to take that buy sell liquidity, and then it can trade that fair value gap as well. After that it can expand lower, or if it doesn't go over there, if it doesn't want to go over there, from the 15-minute chart I have this 15-minute last fair value gap. Okay, this is the last fair value gap from 15-minute chart. From 15-minute chart I will watch this 15-minute fair value gap. If it can hold the price and send it back, then there's so many liquidity over there, whatever we will get it from there. Right now I would love to see some kind of higher run until it has taken that buy sell liquidity. When it will take that buy sell liquidity, everything is done. I mean that is enough for me. Okay. More, okay, no brother, I'm just sharing my experience. When you don't have clear view of the market, then you find more confirmation. If your view is clear, then one confirmation is more than enough, guys. uh, Best thing is that fair value gap rejection can be used as short term low and short term high, and it can use as MSS swing. That's cool, brother. I mean, that is your observation. When I don't see any precision to my market, I don't do anything. Okay, I just read the price. I'm not hurried to take. I'm not hurried to take my entries. I am not. I don't force market to give me an entry. What I do wrongly, that is my stop loss trailing. Okay, sometimes I trail my stop loss too fast without following the rules. I do that. Okay, I'm working on that. That is my weakness. I told that in public, but I have comparatively a very strong psychology where what helps me not to take entry every single time. I take entry when I get something very clean. I mean, am I in the 1 minute chart? Yeah, I'm 1 minute chart. I would love to show you a entry over here somewhere. I saw that. Second, let me find it first. Okay, okay. I think it is over here. Okay. Yeah. So this is the kind of setup which I really love to take. Okay. Look over here. This is the clean buy side liquidity. When price has taken that sell side liquidity, I tweeted it already. I mean, if you are in my Twitter, you already know that I have tweeted that. Super. I got this market structure shift. That is very clean market structure shift. There was the fair value gap. This is the liquidity, or this is your target. This is the perfect setup, man. You have to take your partial above that high. You have to take it. Then rest of all you can hold until here. When it is taken, you are done. Now, what do you have over there? So many people will say so many things. What I see, I will talk about that. I see two fair value gaps. This is the breakaway gap. This is the first fair value gap. Price came to this first fair value gap, it shouldn't go above the constant encroachment of the breakaway gap. Why this is the first and second fair value gap. Price has taken the buy side liquidity, market structure shift. This is the first fair value gap, that is the breakaway gap, that is the first fair value gap. Okay, I mean the second fair value gap. So I'm going to remove the breakaway gap from there. So this is the first fair value gap. Above that buy side liquidity, I have that fair value gap. I'm going to mark that, and I have done that beforehand. Trust me, brother. So price come here, it went lower. What it has done? Again, market structure shift as my bias was bearish until it reached to this fair value gap. It shift the market. Sorry, it has shifted the market structure. There was no fair value gap, so there is no valid entry. Then it gave me another market structure shift. No fair value gap, no entry. I am not doing anything. I knew prices coming over here. I knew it. I didn't do anything. 15 I feel can be used as PDRA. Brother, I told you that I don't see market depending on the PDRA. I mean the premium and discount area. I have already explained that for near about half an hour. That's why PDRA I don't talk about. Okay, so I hope you will get my point, brother. I mean, if you are late to join, then you have to watch that part uh, again. But I have already talked about the PDRA. In general, if you ask me, 15-minute I5 can be used as PDRA. Obviously, you can use that as a PDRA. That is not, there is nothing wrong with that. Okay. What happens if we miss the travel cap? You will wait for next setup. You have to wait for the next setup. Friday 5th January 103 to 130 BMS. Friday. So this is the Friday. 103. There's something here. You are talking about here, I think. 103 to 130. 103 to 130. Let me find it. 103. Okay, so here to here. Are you talking about this? Where is 130? Can you please mark it? I mean, can you please tell me the level one more time? I mean, which you are talking about? Okay, so you are talking about this one. Is that market structure shift or not? No, this is not market structure shift. I mean, from 1 minute chart, that is not, that can't be a market structure shift. Your market structure shift has to be very clean, like this, very near to the market. Okay, but here it has worked so many times. This is kind of liquidity making. If you are talking about this one, okay, or any type of this liquidity or something like this, that is not valid. I mean, for the shifting market structure, it is not valid. But I mean, if you miss, okay, sometimes I am rushing that trade. That is the psychological issue, brother. Read up. That is the psychological issue. It happens to all of us. Okay, not only you. I also sometimes rush to my trade. I'm not going to lie. To be honest, sometimes I rush and I take losing entry. Okay, to be honest, if you rush, you will take lose. If you don't rush, if you can think the way that I am going to get another entry that will be much more easier, you will avoid the losing entry. So rushing is something you have to work. Okay, this is your internal problem, your psychological problem. So you have to work with your psychology. If you rush, you will take loss. That is for sure. That is certain. That is obvious. Okay. There was another entry over here. So if I remember, I mean, after taking the buy side liquidity market structure shift, there was no fair value gap. But here the internal, I mean, when I got this market structure shift, and this was more obvious because when price come to the first fair value gap, it failed to come over here and take the buy side liquidity. Instead of that, it started to go lower. Remember, this is two fair value gap. from 15-minute chart. That was the breakaway gap. That was the first parabolic gap. Price came here to the first parabolic gap. There I didn't see any setup. So that run I had nothing to do. When price come here, failed to go above, above anywhere to take the buy side leg or something. Okay, it has just traded that order block. It has started to go lower. It broke dramatically. It has broken, and there was the market structure shift, but unfortunately there was no parabolic gap. Price has taken the buy side liquidity one more time. After that I got market structure shift. This would be the entry. That could be your entry until this low is broken, or the breakaway gap upper level. That could be your entry, though that is so risky because I was looking for buy. Finally it has given me this setup, and perfect setup. So that was from yesterday. Yesterday was fun, man. Yesterday we had fun because so many so many things I have explained or I have described beforehand. See this one, look, I have marked it before, even before 8:30 news. Just let me load it, let it load. If it load or not I don't know, but if you go to my Twitter, you will see, you will get every single thing over there. Okay, and my internet is now very bad. Whatever, if you can see over there, uh yeah, this was the setup. Okay, when price came to this daily parabolic gap, i I was I have marked that market structure shift in beforehand. I have marked that buy setup over there in beforehand. That means what I am talking about here. See this market structure shift. Okay, I talked about this market. I'm talking about this market structure shift when price was over here. That was the setup. I would love to see some kind of market structure shift. Price will come to the favorable gap. Then I had the buy side liquidity over there, and above there I had another buy side liquidity. Price went through this level, this buy side liquidity, that buy side liquidity. I showed you how to take entry over there, and when price come here, how to take entries. Every single thing I have tweeted before. I'm a genius, man. I'm a genius. I was just kidding. So I think it's a long live streaming. I didn't plan for this type this long, but it is what it is. If any of you here you are new, and if you think it's insightful for you, you can subscribe to my channel. If you like it, please don't forget to give me a thumbs up. I really love to get your thumbs up, and don't forget to write it down that it was helpful or not. Okay, so that's a request to all of you. Please give me a feedback that it was helpful or informative or not. That will be easier for me to explain the things when I will be live next time. I can explain something maybe in a different way if it is not informative or the way you can understand, not the easy way, and I will explain them maybe in other way, because I'm not a teacher. Okay, and my English is not my mother language. My English is not so good. I know it's difficult to understand. I'm sorry for that. I have nothing to do. I'm just working with my English as well. Everything because of you guys. So thanks for the explain. No problem, Tree. No problem at all. So that's a request. Please don't forget to give me the feedback. And if you're new, you are welcome to my channel. If you would love to subscribe it, please do it. Okay. Thanks. No problem, Sanju. So be well. I hope we will meet in Monday. If we all are alive, then we will meet at Monday. Okay. See you guys. Bye bye.